All right, everybody. I hope everybody's having a great day. Good morning. Yes, finally, I can say good morning, and it's actually appropriate to say. So this is our first episode, our first live stream of Money Maxxi. It's your boy Rooster on the mic, giving you that hype for this Thursday. So we're gonna start doing this every Thursdays and Mondays, every Mondays and Thursdays. Okay, every Mondays and Thursdays around 7 a.m. Eastern. We're gonna start doing this. It's gonna be like a couple of hours where we talk just everything about money. All right. We're gonna talk to all things money. And if you guys ever want to ask me about anything money related, you guys are welcome to come to the Discord. And if you're watching this live stream right now, there is a link to the Discord in every social that this is being streamed to. Right now, this is being streamed on YouTube. It's being streamed on TikTok, Kick, and I believe that's it, right? Yeah, YouTube and Twitch. All right. So there's 4 platforms that this is being live streamed from. And if you go to the About section on every single one of those socials that we're streaming off of, there is a Discord link. The Discord is to the Key Crew. Lock in, break out. That's the group where we meet up and we talk all things trading, finance, macro. We even do some gaming in there. We actually have some pretty hardcore gamers. We actually have a few professional gamers as community members. We even have a few professional gamblers, professional sports handicappers. We even have some professional poker players in our community. So come by. There's always something for you to do. Gaming, gambling, DJing, trading, investing, all that good stuff. It's just a very, very good vibe. So, again, you know, feel free to come through to the Discord, ask me anything. It's kind of, think of it like, you know, those like radio shows, like think of it like that. Think of it as like a radio show. And you know, you get to, you have the opportunity of calling in and asking me anything you want that's finance, money, or anything related like that. So you may be asking to yourself, well, who the hell are you? Like, who are you to be answering these kinds of questions? You know, I'm just a dude with the chicken mask, right? So in my private, like, and some of you guys know me from my private life. Some of you guys have worked with me in the past. We've got community members who have worked with me on various different projects, various different endeavors. You know, right before I was streaming all of this, I used to be in Web3 marketing. So did a lot of marketing for crypto projects for different DEXs, like decentralized exchanges. I even did a little bit of work for centralized exchanges and some of these options trading and hedging protocols, different hedge funds that were crypto related, portfolio managers, on-chain portfolio managers. I did business development for them. And then before that, I had a career in banking. All right. I was a vice president of one of the largest banks in the world. And then, yeah, somewhere along there, I took a left turn somewhere. No, I'm just kidding. I did not take a left turn anywhere. I decided that I wanted to leave that and wanted to get into crypto. That was around like 2019, 2020 or so that I transitioned more into Web3 and started doing a lot more work in that Web3 and crypto space. Now I do a lot of trading. I trade some crypto. I trade stocks. I trade options. Most of my trading is around TradFi as of now, just because there's so many opportunities right now when it comes to currencies, commodities, and stocks, emerging markets, and things like that. Of course, we'll go all over that today. But I still trade crypto. And actually now with RWAs, with real world assets, it's a lot easier now to trade what we call traditional finance tickers, like, you know, like different currency pairs, even oil stocks like the S&P 500, the NASDAQ. You can now trade all of that with crypto guardrails in decentralized finance in Web3. And actually, there is one platform later today that I'm going to be reviewing I'm going to show you some live trades on that platform. It is a decentralized exchange. It's a new one that's about to come out. We're getting in on the ground floor. This rooster is giving you all the alpha today. So today I'm going to be going over that. I'm going to be doing like a little mini like beta review of an early release DEX that I was fortunate enough to get in on, and I was one of the first people to get onboarded for the beta testing on that. I tested it over the weekend and earlier this week, and you know what, I was blown away. If the mainnet launch is anything close to what they released for their beta, I think this is going to be a great platform. I mean, you know, all of 2025, we heard about all those DEXs. Like if you guys were in crypto, your timeline was filled with like Aster, Hyperliquid, all these DEXs, right? Well, I think in the second half of 2026, your timeline may be bombarded by this new DEX. Okay, I'm telling you, I have not seen an offering quite like this before, as far as tickers and everything that are allowed to be traded on that platform. So anyway, I see that we got already a few people typing in. And again, if you have any questions, anything related to money, investing, economics, finance, anything like that, let me know. You can put it down in the comments. You can even join me in the Discord. Again, all the links are in the about section. Also, too, if you see, there is like all my socials and everything on the overlay of everything that you're watching right now. I have the same. It's Rooster Brewster. The last E is a 3. It is the same ID across all platforms. I have the same username across all platforms, so you can find me everywhere, literally. All right, so let's get down to it. Now, some of you may be asking yourself, some of you may be like thinking to yourself, man, why should I even care about money? I know, because the last 2 or 3 weeks, all I've been doing is streaming video games, right? I've been playing video games. The reason why I've been playing a lot of video games in the last couple of weeks is because, well, trading is 80% waiting. Okay, and this I'm already starting to get into like some of these like trading topics and things like that. But anybody who knows, if you know that most of trading is waiting for your conditions to come to you. Like either your price has to come down to you or some type of conditions where you have your edge. Okay, Warren Buffett said it the best. He said that investing is like, it's like waiting for that perfect pitch, but you don't get any strikeouts. There are no strikes. There are no strikeouts. You don't have to swing. You can wait and swing when you have the greatest advantage. All right. And so because of that, there's a lot of waiting involved. And so during those waiting periods, I get bored. Okay. So I get bored. I mostly generate most of my income through trading. So I get bored. So I started playing video games. And so when I first started doing all these streams, I was doing video games and things like that. So I know that right now we got some of our audience members who are just like hardcore gamers. And some of you are asking probably like, why should I even care about money? Well, I'm not saying money is like be all end all. I'm not trying to say that, okay? But you cannot deny that certain amount of financial security is important in your life, okay? Let's not deny that, all right? Like some sort of financial security is important. Like if you want to be a professional gamer, if you want to be, I don't know. I know that, some of my audience members, because I play like Fortnite and things like that, I know some of you guys are very, very young. Some of you may be like in high school, in college, or maybe in your early 20s or whatever. If you're super, super young, it's really hard to think 10, 20, 30 years down the road. I get it. When I was 21 years old, the last thing I wanted to hear from somebody was something about 5 or 10 years later. I'm like, man, that's like forever. I'll worry about it then. Well, blink a few times and yeah, those years, the time just gets faster and faster. I don't want to sound like an old man. I'm not an old person at all. I'm very young myself. But as the years go by, time just goes by faster and faster. It just seems like that, right? Everybody who's like in 30s, 40s or above will tell you that. Like even every year, everything just gets faster and faster and faster, right? So I'm not trying to push you into doing something financial related. I'm not trying to do that. That's not the point of the show. The point of the show is to really educate you, okay? So we're going to be talking about all things money during Money Maxi, okay? None of this should be taken as like personal investment advice. You should take it as education and entertainment. Okay, so we got past that disclosure. Now, again, why should you even care about money? So let's look at different age groups, okay? I highly doubt there's a lot of people out there that are 65 and older listening to this right now. You're probably not listening to this if you're 65 and older. If you're 65 and older, you're probably thinking about retirement. You probably hate your job. You probably like are worried about Social Security. You're probably worried about healthcare, all these things. So that's why money is important. You're going to be spending a lot more money at retirement for medical bills. You're not going to be making as much. So you have to have certain things tucked away. You can't recover from a financial emergency as well. So if you're invested in the market and the market tanks, you just don't have as much time to recoup those losses, right? So, money management and becoming really conservative is very, very important at your stage in your life. So that's why I don't have to convince you. If you're 65 and older, you don't need me convincing you that money is important. You probably know that better than I do, all right? So let's go down the age group now, okay? So 65 and older, that's that. If you are mid-40s to mid-60s, okay? So 45 to 65, let's say, okay? You're probably, most Americans, and I'm talking about this in more of a perspective of Americans, all right? If you're an American between 45 and 65, you're probably wondering, how are you going to make it at retirement? Most Americans actually do not have that much in savings. I think I saw a statistic. It's like most Americans, the average American cannot afford a $2,000 or $3,000 emergency. Now let's think about a $2,000, $3,000 emergency, right? That's like braces for your kids. Like braces for your kids is like $4,000 or $5,000. Okay, one of my friends has a young child, and during baseball practice, he got hit in the face by a baseball, and he had to pay like $4,000 or $5,000 for braces and he had some damage or something like that, so they had to fix it, right? It was actually much more than that. His insurance covered some of it, but he still had to pay like a good $4,000 or so on top of what the insurance paid. So that was an emergency, right? Most Americans cannot afford a $2,000 or $3,000 emergency. All right. Now think about it. Most emergencies. I know, like a car accident. If you need a new car, you need more money than that, right? If something medical happens, I don't know about you, but man, you go to the hospital and easily you could spend $1,000. Even if there's nothing seriously wrong with you, you could spend easily $1,000. So, if you're 45 to 65, you're probably well into adulthood. You probably got some kids, maybe some kids in middle school and high school. You're probably also thinking about, man, how am I going to pay for their college? How am I going to pay for their higher education? If that's, what you guys are thinking about doing as a family, or trade school or whatever it may be. You're probably thinking along those lines, like your kids, your family, even probably your own retirement. Usually that's when people start worrying about whether they'll be able to work or not in the future. They usually start worrying about that in their mid-40s, okay? Right when the back starts aching, when it becomes harder and harder to wake up, people are just like, man, that 65 is going to be quick. That 45 to 65 is a quick. Time-wise, it feels like nothing, all right? So a lot of people in their 40s are really, they start getting worried about retirement and paying for these kind of big-ticket items like, again, like college education or maybe a bigger house or things like that. So again, money's important. If you're 45 to 65, that's probably what you're thinking about. Again, all these goals that you have in different stages of your life, guess what it requires? It requires money. Again, I'm not saying it's a be-all, end-all. Money is a tool, all right? And it helps us accomplish certain things. Money does give you better access to certain things, okay? A better neighborhood, better school district, better a medical attention at the hospital, right? Money does buy you better access, all right? And so that's why it is important to some degree that you have that financial security that's right for your lifestyle. All right, let's go down the list. Now, this is where we're starting to get into more people that are listening, right? More and more of you are probably younger than this. Let's talk about people in your 30s, all right? Let's say you're in your young 30s to your young 40s, all right? You're 30 to 45, let's say. If you're 30 to 45, you probably are now at like your peak of your earning potential right now. You're probably at that age, you've got to be making as much money as possible. Yeah. You're probably starting a family. Very likely you're about to start a family. You're about to have kids. Maybe you're about to get married. I know with a lot of the urban population, like in big cities and things like that, it's skewed a little bit later. It's more closer to 40 than it is to 30. I know if you're in more of a suburban, rural area, the demographic is such that you're getting married and having kids a little bit earlier. So whatever. I mean, between that 30 to 45, your career's advancing. You're at the prime of your earnings potential. You're about to start a family, about to start, you're buying bigger ticket items like cars, things like that. You're really trying to get out there and really starting your adulthood. I mean, I know that in most cultures, we consider being a legal adult at 18, but let's be real. It's around 30. All right. That's when people actually start getting serious about things, right? It's around the 30 age. So between 30 and 45, you're probably looking at investing. You're probably looking into the future. And a lot of people in the 30 to 45 age group, the millennials, a lot of them are not as loyal to a 9-to-5 job or a career as previous generations are. All right. So you're also probably thinking about starting a business. Maybe some of you are trying to become streamers. Maybe some of you are trying to become, whatever it may be. Maybe you guys are trying to make it in crypto. Maybe you guys are trying to make it in whatever it may be, whatever goals that you have. But right now, you're really trying to stake your claim in this world. All right, you're trying to stake your claim in this world. You're trying to move up in the world. You're very aggressive about it. And that's between 30 and 45 because you want to set yourself up for that better lifestyle, right? So that's why 30 to 45. It's not hard to convince somebody between 30 and 45 that money is important, especially that generation. That generation went through the financial crisis and everything like that. So for those of you that are 30 to 45, you guys are probably, looking at your careers, trying to make more money. Your kids are probably maybe young, middle school, something like that. And you guys are probably even thinking about how am I going to pay for their higher education as well too. Right? Again, money, tools, you need that. Okay. You have goals that cost money. This is why money's important to everybody. This is the argument that I'm trying to make. All right. Let's go even down the list because I do have it's really funny. When I started teasing the idea of doing a finance related live stream, I actually got a couple of DMs for questions and I'm going to answer all those questions today. So again, if you want to ask me anonymously, like some finance related questions, go ahead. Get in the Discord, let me know. I will either bring you up on the VC and you could actually say it live to me and we can go back and forth and have a discussion around it. Or you could just DM it to me and I will, read it. I won't I won't dox you or anything like that. It'll be all anonymous and I'll be like, oh, a caller DM'd and I'll say it like that. I won't say your name or anything like that if that's what your wish is. All right. We can keep this completely anonymous if you wish. All right. So I did get actually a few DMs from people that seemed really young, like maybe in college, maybe even in high school. Okay. So let's talk about people like that. Let's talk about people that are 18 to 30. All right. By the way, so 18 to 30. So that's usually most likely you may still be at your parents' place. All right. A lot of people in that age group are moving out of their parents' homes later. You may still be living with your parents. Maybe you're on your own. If you're on your own, maybe you're in your first apartment. Maybe you're in school. Maybe you're in college. Maybe you got your first job after school. You're in that position right now, okay? Statistically speaking, your money's probably tighter for you than other demographics. You probably have less disposable income than other people. It's not uncommon for that age group to be going paycheck to paycheck, even racking up debt. A lot of young people are actually increasing their credit card debt, which is not good. All right. Again, you're trying to make it in this world. You're trying to find your place in this world. You're trying to stake your claim on this world. Right. And again, that requires some funds, right? You got to live, right? You got to live. You have to grow your career. And a lot of people are very entrepreneurial, especially that 18 to 30 group. And with the advance in AI, and if you actually look at like the timeline on Twitter and everything like that, people are talking about, their jobs getting replaced and things like that. So a lot of people between 18 and 30, they're worried if their career is going to be around in the next 10 years or not. Okay, there is a real fear of that. And so a lot of people in that age group are also very entrepreneurial. They want to become streamers. They want to become this. They want to become, contracted individuals. They are into like the gig economy and things like that. And again, that requires money. If you want to make it as an entrepreneur, if you want to be a streamer, if you want to be a gamer, all these things, you need to be able to support yourself without an income for a certain amount of time. All right. There's not many business ventures where you could start making a return and money on the first week or the first month. That rarely happens. Okay. Even in crypto, it took me a good 6 months to a year before I started making steady money on crypto. And even then, it's very seasonal. When the crypto market is down, I don't get paid for months. All right. So I got to be able to withstand all that. It takes money to do that. I got to be able to invest and grow my money without putting the hours in order to survive, basically. So again, investing and trading I think will become more and more important to young people as part of their financial strategy on a day-to-day, month-to-month basis. And you're already seeing that young people between ages 18 and 40 are more likely to have traded crypto. They're more likely to have traded stocks on something like Robinhood, and they're more likely to have gambled on an online casino or a sports book. Isn't that interesting? Yes, a lot of young people think sports betting and online casinos is a valid way of making money. Now, I don't know all about that. I do know that in our community, we do have a few professional sports gamblers, but I wouldn't call what they do gambling. They're not like doing it for fun. Like, oh man, my team is Ohio. I'm going to bet on Ohio beating Michigan. Yeah. It ain't like that. These guys are looking at data. They are running machine learning algorithms, and they're trying to find correlations between the weather, who's in the starting lineup, the time of year, the time period of the season of the actual the sports season, all of this data points to come up with a expected value that is greater than what they put into it. Now that's different. That is not gambling. Okay. Now if you're doing sports gambling in that way, okay. You've got a system, you've got discipline and patience. Okay, go for it, right? But most people are not. 99.999% of the people that are actually sports gambling or doing anything like casino related, they're gambling. There is no methodology. There is no mathematical edge to what they do. That mathematical edge is rare in sports gambling. It's also rare in trading as well too. Most people treat trading like it's gambling, all right? But the point of all of this is this. A lot of young people are doing this. Again, that 18 to 35, 38 demographic, again, has the highest rate of stock trading, crypto usage, and sports gambling out of all the other previous generations. Okay, and so I think a lot of that has to do with young people are underemployed. They get jobs that they did not go to school for. You go to school for 4 years and then you end up doing something that is totally unrelated to your degree, right? I know a lot of people that have business degrees or all these other degrees, even engineering degrees that are now in food and beverage. Or or a manager at a restaurant. Nothing wrong with that. There's nothing wrong with being in food and beverage or being a manager of a restaurant, but that's not what they were originally intended on doing. They were originally engineers. They got laid off. Their job got replaced, and all of a sudden now they had to switch and pivot into something different, right? You're seeing more and more of that, all right? And so because of that, a lot of young people want to be able to take their own financial future in their own hands. Unfortunately, they're resorting to really stupid things to do that. All right. And the point of Money Maxxi, this live stream, is to educate people, all right, and form a community where we can bounce ideas off of one another and try to figure out ways to maximize all of our returns. All right. It's all about Money Maxxi. I'm not a this Maxxi or that Maxxi. I'm a Money Maxxi. I'm all about making money. All right. So if there's any way that I can help you guys make some money, I'm going to bring that to your attention. And the same thing, maybe you guys see an opportunity that I missed, and maybe you guys can, bounce some ideas off of me as well too. I love that. And that's the reason why I created the Key Crew community, is so that we can learn off of one another. And actually, a lot of our community members that are traders in the Key Crew, they used to be part of a different community beforehand. Shout out to the Checkmate crew. And that community, they kind of got, merged with us here at the Key Crew. And I've been part of the Checkmate crew for like years. And throughout the years, we've always traded tickers, traded methodologies, different strategies with one another, and we have all grown together. And hopefully we can mimic that with this bigger community, this wider community here at the Key Crew, and hopefully we can all, maximize our return. So anyway, that is kind of a synopsis on why I'm doing what I'm doing and why you as an individual should even care about money. So no matter what age you are, you will need money to accomplish your goals. Again, it's not a be all and all, but it is a tool, and money does get you better access. In most things in life, you have the more money you have, first class tickets versus coach, right? Better access. All right. And so, sometimes that access means that you can save a lot of time. And out of all the commodities on this planet, time is the only thing where once you spend it, it is truly gone. Right? Because of money, you can spend money, lose money, you can always make it back. If you lose time, you can never get that back. It's the only commodity on this planet you can never get back once you spend it. So money does sometimes buy you time, and that is a fact. All right? I'm not trying to say money is the most important thing in the world. No, it's not. I actually think, your health and, having the sense of family, I think is way more valuable in life than any amount of money in this world. But again, we have to be pragmatic about things. We live in the modern world, right? You need money to survive. You need money to accomplish certain goals. It is what it is. It's a fact. Okay. And then, and now going back to what I said earlier, I did have a couple of DMs from people that seemed like they were younger. One of them said like, hey, what I'm trying to do is they're trying to become like a streamer or a gamer, and they're trying to figure out a way to save money so that they can do this when they turn 18 or something like that, right? And even to that young individual, I will say that yes, you need to start looking at investing and saving your money toward that future. Because once you turn 18, let me tell you, man, it ain't cool asking mom and dad for money. It ain't cool anymore. At some point in your adult life, it'll make you cringe when you ask your parents for money. All right. At some point in your adulthood, you will find that moment. All right. It's just not a good look for, to go into the bank of mom and dad and ask for money because you don't have enough. Right? Because at that point when you're 18, you can work for it, right? But the thing is, if you're trading your hours for money, then how are you going to work on all the things that you want to work on? Again, money buys time. It does buy time. Because if you didn't need to work those 8 hours that day, that's 8 hours you could have spent on your own project, on your own streaming, on your own games, on your own whatever, on your own business, right? So I commend you. If you are like in high school and you're watching this because you're interested in growing your financial future starting from now, good for you. Good for you. Start young. All right, start young. I'm going to tell you right now, man, I started trading stocks at a very, very young age. I think the first time I traded a stock, I was like 13, 14 years old. All right. I had one of those UTMA accounts, you know, those like minor accounts that your parents can sign off on. So yeah, I had one of those. And I remember when I was in middle school, every summer I would mow lawns. I would mow the grass in the neighborhood. And I saved like, I think by the time I was like a freshman in high school, I saved like 2 grand. I saved 2 grand by the time I was a freshman in high school. And I put that all in the market. I put that in the stock market. Man, like that thing. Yeah, I remember actually it was even before freshman in high school. I was like in 7th or 8th grade. Yeah, I must have been in 7th or 8th grade. And I saved 2 grand and I put it all in the market. I remember my first year, I made that 2 grand go into 10 grand. And then the year after that, I lost it all. All right. So that was my first education in trading. Okay. So hopefully we can avoid that together. Okay. If you're young, there is no need to be so headstrong. I mean, I just told you from before, it's great to start early, but don't push your luck either. All right. You don't need to go too risky on your investment. When I was young, I thought, man, I'm young, I can risk it. You know, looking back, if I had been a little bit smarter about that money, I think I would have had a much easier time when I turned 18. All right. Because I remember I was like 12. Yeah. By the time I was 13, that 2 grand became 10 grand. And then by the time I was 14, it was like, that was gone. It was all gone. And that money could have been very helpful when I turned 18. And when I turned 18, you know, I moved to California and my expenses went way up. Let me tell you, that extra 10, 20 grand would have been very helpful then. But I was young and stupid. So, I mean, we all learn, right? So, I mean, anyway, so that's kind of my money journey. And, you know, and you don't even, let's actually, I actually created like a financial calculator on Excel. So right now on your screen, you're probably seeing the Excel spreadsheet that I made on this. And later on, down in the comment section or the about section on the YouTube video, I will post a link to this Google spreadsheet. And so you can play around with it yourself if you want. I'll give this to you for free. I'm not going to ask for any money. I don't need that kind of, I'm not going to charge $5 for something like this. No. Okay. I'll give it to you for free. You can use it for free. Okay. So, yeah. So anyway, I just put in the current age 25 to 35. That's like 10 years. Okay. So if you're not quite 25, let's say you're 20. All right. So then, just put yourself in the shoes of a 20-year-old. If I put age at retirement at 35, for you as a 20-year-old, it's like saying age at 30. Okay. And it's not really retirement. I just say retirement because I used a template to build this. So I didn't really 100% build all of this myself. I downloaded parts and pieces of different templates and I put everything together just as a very, very easy way just to estimate how much money you could possibly make if you were to invest now versus later. That's all this exercise is about, okay? So, I mean, let's say I don't know, if you're watching this right now and let's say you're an 18-year-old and let's say, you know what, in 3 years, I don't know, in 5 years, I want to start, my own business or something like that. In 5 years, 18, that would be 23, right? Now, if you're older than 18, if you're 20, then it's like saying, well, okay, I'm currently 20. I need this money by 25, right? So just shift it based on where you are in your life, all right? Let's say you're under 18. Let's say you're 14 right now, right? And you're like, well, by the time I'm 18, I want to be on my own and start streaming and all that stuff, and I need money for that, right? So, if you're 14 years old, then this age at retirement, it's like saying 19, right? So if you're like 14, 5 years later is 19. If you're 18, 5 years later is 23. Important thing is it's just 5 years, okay? 5 years. So in 5 years, let's say you were to get a return of about 6%, okay? 6% return. So 6% return means that, and then also too, this is the return after retirement. There is no after retirement. So, you can set that to 0, because this is not a retirement calculator. If you want me to run this as a retirement calculator, I can always do that. But I'm just doing straight simple return. I'm assuming that most of you guys that are watching are not close to retirement age, okay? Now, if some of you guys are close to retirement age and you wanna see the actual like retirement payouts and all this, let me know, but it's all built in. It's literally all built in. So if you are near retirement age, you could still use this and calculate, well, okay, if I start pulling money out of my investments at retirement, how much am I gonna have left? It's all in here for you, all right? But I'm speaking in the perspective of somebody really, really young, again, like an 18-year-old, okay? And by the time they're 23, maybe after they spend 4 or 5 years in college, they wanna start doing something, maybe start their own business, whatever, all right? And so, you know, and right now, and also too, you could set your own salary. All I did was set to 10% at $10,000 annual salary. I know that if you work, even if you work in American fast food, you're making more than 10,000. Even if you're making even if you're doing part-time work at minimum wage, you're probably making more than $10,000 a year. The important thing is 10% of 10,000. What I just wanted to simulate was that you're saving $1,000 a year. Okay, I just wanted to show what it's like. What is it like to invest and save for 5 years, making 6% return per year? And you may be thinking to yourself, well, is 6% per year reasonable? Well, the stock market averages around 6 to 7% per year on a long-term basis. Okay, that's the stock market, all right? Right now, interest rates at banks, you know, if you go to like one of these community banks, you may be getting around like 3 to 4% right now. You know, if you go to like one of these bigger banks, they're not giving anywhere near that much. Like big banks right now paying probably like, I don't know, like 1 or 2% or something like that. But let's say, you know, you're able to get like 6%. Like some of you guys who are like part of my old crypto degen crowd, you're probably looking at that 6% and you're like, man, that's my slippage, bro. Like that's my slippage. You know what I mean? But like, and for some of you guys that are in crypto, you're probably thinking like 6%. Oh man, that's the loss I take for just buying a token. You know, and to those crypto people, reset your expectations. I get it. Like some of you guys may have gotten into a coin that did like 100x. But how many losses did you take to get that? All right, let's average it out. Yeah, when you average it out, and if you actually look at pump fund data, most meme coin traders lose money. There's like less than 1% who actually make it. And out of the people who actually make it, most of them are making less than $1,000. All right, so let's be real. All right, so if you take all your wins and losses, most likely you probably lost money. All right, so let's just think about like somebody who's not going to be trenching and like just being in front of a chart, you know, getting abused by 1 minute candles. Most people are not going to do that. And I don't condone that either. Do not be a day trader. That's to me, being a day trader. And you know what? No offense to day traders. If you're a day trader and you can make up all this money doing day trades, more power to you. All right. But if you feel like you're missing out because you're not day trading, let me tell you, most people who say they're making money day trading, they're lying to you. They are lying to you, all right? You can actually go yourself, go to the New York Federal Reserve website. The New York Federal Reserve website. The Federal Reserve is the central bank of the United States. The New York branch is the most powerful branch of the Federal Reserve, and they collect a lot of data. The New York Federal Reserve gets brokerage performance data from all the major investment brokerages in the US. And they compile data on wins and losses of all these accounts that are at major brokerage houses. And it's like something like 95% of active accounts lose money. 95%. All right. So I don't condone doing all this like active day trading. Okay. If you want to trade, there are better ways. The way I believe the way that trading, the way to trade that works for me, at least, is looking at these long-term trends and getting in at a good price. Get right and sit tight. That's the strategy. That's my strategy. Buy right and sit tight. Buy a great asset at a great price and leave it alone. All right. That has created more wealth than anything else. All right. And I'm going to show you how to do all that as we progress in this live stream. Okay. Maybe not today, Because today is like really basics. Like, why should you even invest? And also, too, there's a bunch of questions that people DM'd, and I'm going to get to all of those as well. And if you want to DM your question, make sure to DM it, or you can even put it in the comment section. Join the Discord, join the live feed, and you can even ask in person voice, and we can go back and forth on your situation. Okay. Okay. So anyway, let's go back to this retirement calculator. So we have 5 years. If you're going in 5 years, making 6% per year, again, reasonable rate of return, and you're saving $1,000 a year, you're contributing $1,000 a year into this in 5 years. All right. In 5 years, you have contributed $5,000 into this account, right? But your final balance is $5,600 because of all the returns you made on that money as you were putting this in. Now, to you, it may not seem like a lot of money, like, oh, $600 out of 1,000 that I'm putting every year. But the thing is, that's $600 extra you would not have. Like, think about it too. In that 5 years, don't you think costs would have gone up as well? I know every year I go to the grocery store, I spend more and more and more every year. Every year my rent goes up. Every year my insurance cost goes up. Every year this goes up, that goes up. It's called inflation. All right. Every year prices go up. And right now, especially with all this Iran conflict, guess what? Oil prices just went up like 30, 40%. Let me see, actually, oil right now. Yeah, oil, look at this. Oil, just like 2 weeks ago, oil was $65 a barrel. Now it's $91 a barrel. It went up 50%. So guess what? When you start driving around in about a week or two, your gasoline prices are going to go way up because of that. Again, that's part of inflation. It's not just gas, but your groceries, everything, your insurance costs, everything going to go up, right? Because when oil prices go up, guess what? The shipping costs go up too. So everything that you ship, everything that you import, everything is going to go up in price. Okay. And again, over long periods of time, it's more and more and more inflation. All right. So, yeah. So again, you put $5,000 into this, $1,000 a year in 5 years at a 6% rate of return. You got $5,600. Okay. Now, 5 years in the big scheme of things is not that much time. All right. It's not a lot of time. Right. So, you know, getting this type of return in 5 years, it's actually really good. It's actually really good, right? Now, let me show you something. Now, let's say you're able to hold out. Let's say you put $1,000 a year at 6% for 10 years, okay? All you got to do is just make sure the current age and the age at retirement. The reason why I put age at retirement is because I just wanted to make sure that people who are near retirement age, they could, like, you know, easily, like, you know, make it self-explanatory. But really, that age at retirement is age at target, whatever your target is. Okay. So if your target is 10 years, you just add 10 to your current age. Okay. So in 10 years, if you put $1,000 away a year at 6% rate of return, you're going to put $10,000 over the course of 10 years into this account. Guess what you're going to have? You're going to have 13 grand. You're going to have 13 grand at the end of it all. All right. That's $3,000. That's 3 years of contributions that you made without you having to lift a finger. You didn't do a damn thing. This all happened while you were sleeping. All right. Again, another Warren Buffettism. I'm a huge fan of Warren Buffett. If you can't tell, but Warren Buffett said, if you cannot figure out a way to make money while you sleep, you will be forever poor. That's what he said. It's something, I think it's something along those lines. Hold on. Sleep, money, Warren Buffett quote. Forgot what it was. If you don't find, yeah, that's what he said. If you don't find a way to make money while you sleep, you will work until you die. That's what he said. Yeah, if you don't find a way to make money while you sleep, you will work until you die. That is the exact Warren Buffett quote, and that is very true. You have to be able, there's two ways to make money in a capitalistic society. You can work for it. So basically you're trading time and labor for money, or you can deploy capital. Two ways of making money. You can either work for it, trade your labor and time for money, or you can deploy capital. All right. Now, for most of you, most people on this planet will have to trade some sort of labor and time for money. It is inevitable. We all have to work at some point. Like, you know, unless you're born rich, unless you're one of those trust fund kids, at some point in your life, you're going to have to work, right? You're working hard for your money. Your money should also be working hard for you. for your future so that you don't have to work until you die. All right. Most young people today do not value working until they're 70. They just don't want to do that. I don't want to do that. Shit. No, I don't know anybody who wants to do that. Right. So that's why they're going into trading. That's why they're going into crypto. That's why they're going into sports gambling, because everybody wants to make it out. Nobody wants to like work for something that they don't own, that they don't get a piece of, just to get laid off one day. Nobody wants that anymore. People are wise now. People are smart. They've smartened up. People are just not going to take that anymore. All right. And that's why they're looking at all these that's why crypto blew up. That's because it gave people an opportunity to get out of that rat race. Now, for most people, they got wrecked. All right. For most people, crypto was like a false dream. And now they're pivoting to now sports gambling. Sports gambling now is like, I saw some statistic. I don't know how true this is, but I think it was either DraftKings or FanDuel. They came out with a study and they were like, yeah, certain demographics are now, they have now placed, there's a higher rate of people that have placed a sports bet over placing a trade. So, again, it's just, I don't think it's because people are like, they're just more into the gambling entertainment aspect of it. I think it's the greed aspect. They're trying to make money on the side, and they're choosing to do it, in my view, in a very stupid way. All right, in a very, very stupid way. But in the end, I think it comes from a good intention of, yeah, I need to find a way to make money without trading my labor and time. Okay. And so, there are ways to do that. There are smart ways of doing that. I don't think sports gambling is that. But anyway, that's a totally different discussion. But anyway, you can see now in 10 years, this is what it becomes. Okay. So so now let's think about this. Okay. Like, and let's shift demographics here. Let's say you're in your 30s. Okay. And let's say you're thinking to yourself, gee, should I start investing my money now? Let's see. Okay. For most people want to retire by 65 or so. All right. So if you're 30 and you're saving $1,000 a year for 35 years, making 6%. All right. By the time you're 65, right? That $1,000 a year for 35 years means you put $35,000 into this account at 6%. Again, that's a very conservative rate of return. Average S&P 500 over the course of 10, 20 years is around 7 to 8% per year. Okay. So I'm being super conservative. We're being super conservative in our rate of return. Okay. We're being super conservative. And after 35 years, that 35,000 is going to turn to $111,000. Okay. That's $111,000 you did not have. So you put 35,000 into this, you're getting 111,000 out at 65. All right. So you put 35 in, you get 111 out. That's like 70 grand. That's like 75 grand. That's 75 grand you would not have had if you didn't do this. And that's $1,000 a year. That's less than $100 a month. Less than $100 a month. That's like $25 a week. If you want to break it down into days, that's $3 to $4 a day. If you go to Starbucks, you could buy one of those upside down caramel macchiato, whatever, whatever those drinks. Those are $6 or $7 a piece. So for less than a coffee a day, in 35 years, you could be getting 6 figures out of that. All right. Now, some of you guys, maybe you guys have like more cushier jobs. Maybe some of you guys are professionals. Maybe some of you guys are making like 6 figures a year, something like that. Maybe some of you guys are, better off. Maybe you guys could afford to put a little bit more than $1,000 a year. All right. Let's say you're able to put $2,000 a year. Oops. Percentage of 20%. I got to put the percent sign. Whoop, 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 whoop. Make sure you put the percent sign, because that percent sign, makes a huge difference. Anyway, let's say you put $2,000 a year. That's like a little bit less than $200 a month. Okay. $200 a month. That's $50 a week. That's like $7 a day. Okay. $7 a day. If you put $7 a day away for 35 years at 6%, guess what? That's $222,000. $222,000 that you could save away for your retirement or for whatever. and 35 years. Okay. And again, super conservative estimates here. All right. Again, the stock market usually does around 7 to 8% per year. So, I mean, if we did 7%, let's say, if we were closer to what the market rate is, even more, 276,000, right? But let's just be conservative. Let's be really conservative about this. Let's not like paint like, sugary, let's not sugarcoat things. Let's make it like a dark and bleak world, okay? Let's simulate a dark and bleak world, all right? Because if it's not a dark and bleak world 30 years from now, it's icing on the cake for you, right? Because you planned for the worst, but the worst didn't happen. So that's just extra for you, right? That's extra icing on the cake for you. So that's the difference between, okay, so now 30 to 65, $2,000 a year, 222,000. Now, let's say you delay this by 10 years. Let's say, you know what, man, I'm in my 30s. I want to live life. I'm young. I want to live life. And let's say you really don't give a damn until you're 40. All right. So instead of saving for 35 years, you're only saving for 25 years. All right. 25 years. That 10 years is going to knock you down about $110,000, 10 years. Okay. Less than $200 a month, $2,000 a year. If you start 10 years later, so now you're investing and saving for 25 years rather than 35 years. It's like more than half is gone. All right. So again, this is the importance of saving early, all right? And let's say let's say some of you are 40s, and let's say you got kids that are 15, 16 years old. Hey, tell them to start saving early. What if you start helping them save when they're 18 years old, right? From 18 to 65. 18 to 65, that's a long time, man. That's like 40 something years. That's 47 years. Look at that. Look at that. $2,000 a year, it's $482,000. That's the difference between starting at 30 and 18. Again, about 10 years difference, right? Every 10 years, it's a huge difference. It's an order of magnitude difference. All right. And let's say you're 18 to 65. Let's say they can't afford to put $200. Let's say they can only put $1,000 a year. Guess what? They're still going to have more than the person who started at 30 years old putting double. Let me say that again. If you start earlier, you don't need to put in as much in order to hit your financial goal. Why is that? It's because you let your money compound sooner, right? It's all about compounding. It's, again, another Warren Buffettism. It's not about market timing. It's about market time in. How much time do you let your investments grow? It's like a snowball. It's like a snowball at the top of the hill, right? It starts as like this little like ball of ice. Yeah, maybe the size of a quarter. And it starts rolling down the hill, right? It starts rolling down. Those cartoons, the little snowball, it starts from like a little like pea-sized snowball, and it starts rolling down the hill. And all of a sudden it becomes like bigger than the size of a building at the end, right? Because it just keeps growing and growing as it rolls down the hill with fresh snow, right? Your investments are no different. Disciplined investing is no different. That compounding, that time that you allow it to grow makes a huge, huge difference. All right? So somebody who starts at 18 years old to 65, spending 47 years at $1,000 a year is going to end up with more savings than somebody who starts at 30, putting double the amount. Remember, it was $242,000. That 18-year-old that started saving $1,000 a year till 65, he actually ended up with more, about $20,000 more than somebody who put in double the amount every year. So again, time can be your best friend. If you're a very young person, you've got a huge advantage over everybody around you when it comes to investing because you got more time to let it grow. All right? So again, as a young person, you may be thinking to yourself, watching me like, man, that's boring. I don't want to think about the future. I want to think about the now. I want to have fun now. I mean, there is a price to that. There is a price to that instant gratification. All right. When you delay that gratification, It pays. All right. And for some of you that are like those crypto degens, you're probably thinking it's the same thing to yourself. Like, oh man, I'll start saving later. But the thing is, like, you know, we say it all the time, like, oh, I need to go save some money so I can trench, right? Well, get out of the mindset of like, I need to save money to gamble. Think about, I need to save money to let it grow. Okay. If you're constantly losing money, then none of this shit like matters. If you're constantly losing money. Okay. This is about disciplined investing. This is like, you know, this is like disciplined investing, something that you could count on later on. Because when you're 65, you're not going to be trenching. All right. You're not going to be like day trading 1 minute candles when you're 65. That's miserable, man. That's miserable even when you do it as a young person. You think you're going to do that when you're 65? No way. No way. All right. Be real. Be real. All right. So again, like this is why, like you and let's assume you're like that top 1% trench trader that's actually making money. Set some of that aside for something like this. Set some of that aside for some disciplined investing, because you never know. You know, you might be in right now. It's a bear market in crypto. You know, most likely if you've been trenching for the last like 2 or 3 months, you've probably been losing money. All right, let's be real, right? And so during those good times while you were making money, let's say you took those profits and you put it into something disciplined like this, you'd be all right. You'd be all right. Okay. So again, I think this applies to a very, very wide audience. I think no matter who you are, no matter where you are in your life, financial management and financial security is going to be important for you. Okay. And again, this was like a 1 hour introduction on why you should even care about money. Now, I get it. A lot of you don't come from a financial background. And so a lot of you get turned off by a lot of these financial streamers because they get way too technical with it. They get like, you know, they start talking about charts and this and that and like, you know, doji candles and moving averages, death crosses, you know, golden crosses, this and that. And I mean, I'm telling you right now, most of that stuff is garbage. It's garbage. It's garbage, all right? They're just feeding you garbage. Let me tell you, the most important things when it comes to money, and this is like timeless. This is timeless advice. This is like stuff that they even wrote about in ancient Sumerian days, like 4,000, 5,000 years ago in the ancient grain markets. Yeah. Even the ancient Sumerian, they all had the same thing. This is the most timeless advice that I can give to any investor or trader. Your two best friends in investing is patience and discipline. Patience and discipline. Even something like this thing where I'm talking about saving money with a conservative rate of return, it requires patience and discipline. You're letting this grow for years and you're exercising the discipline, because some of you guys I know are thinking, look, you're looking at that 6% return and thinking, man, I could do better than that. Oh, can you? Oh, really? Because 99% of the top hedge fund managers in Wall Street, they cannot beat the market. 99% of them cannot beat the market. And again, if you think to yourself, well, you know, I can make some trades on crypto and pump fund and this and that, go look up pump fund data. Less than 1% of the people actually make money. And if you tell me you made money, all right, great. Your last trade, you may have made money, but how many losses did you take to get that winning trade? Okay. Some of you guys are like, oh yeah, man, I just turned $100 into $1,000. But the past 3 years, you've put like $4,000, $5,000 away into losses. Right? You've been putting 50 bucks here, losing it. 80 bucks here, losing it. Over the past 3 or 4 years, and all of a sudden you make one good trade and you think you're a superstar. That's not how it works, man. It's not about how much you make, it's about how much you keep. All right? It's not about how much you make, it's about how much you keep. So what if you could 10x your money if you're just gonna lose all of it the next month, right? If you 10x it and you keep it, hey, more power to you. Keep doing your thing. Keep stacking that money. But if you're just hitting like these home runs, but you're striking out every single time and losing lots of money in the process, what good is that? What good is that win if overall you're still losing money? Okay. So again, we're, you know, in this live stream, we're not only going to be talking about these like discipline and investing, but we will also get into some degen plays and some swing trades as well. That's going to be like for the more advanced crowd, and I will try to keep it as non-jargon as possible. I'm going to try to educate you guys in the simplest way with analogies, and hopefully I'll make some like nice little graphics so it can help you remember certain concepts and things like that. We are all going to grow together, and I'm going to try to make this as easily digestible for you guys as possible. All right, so I'm already getting some people DMing me right now. I got a couple of DMs already. So one DM that was just asked me was, where would you invest this money? Like, is this going to a bank, opening up a savings account? What platform in order to get 6% yearly rate? So if you're just joining in, all right, you probably didn't hear this, but in the beginning, I just put 6% as a hypothetical rate of return. The S&P 500, which is the stock index of the U.S. stock market, averages around 7 to 8% per year. 7 to 8% per year. Okay. Actually, yeah. So that's the S&P 500. So of course, some years it does like plus 20%. Some years it goes down. I'll show you a chart of the S&P 500 so you know that I'm not bullshitting. So if you look at this is the S&P 500, and this is this is from 2006. Yeah, so what is 2025? Okay, so this is like 20 years right here, 2025 to this is 20 years, okay? So as you can see, in 20 years, in most long periods of time in the S&P 500, it generally goes up. Why does a stock market, like for example, a US stock market, why does it generally go up? Well, because the US, first of all, has a very, very strong economy. It's a growing economy. It's got a growing labor force, all right? And it is also a country that is increasing in productivity. All right. And so all of this goes towards the index gains. Okay. So even with the 2008 financial crisis, even with all these financial crises, even with COVID and all these losses, there's the losing years. If you actually like extrapolate a long period of time, it averages out to be about 7 to 8% per year. Okay. And so I was just very conservative about it. And I just said, let's knock it down a point or two and just say 6%. Okay, so that's all it was. That's why I chose 6%. It's like a little bit less than what the S&P 500 averages on a year-to-year basis. So can you pay it more as incomes? Oh yeah. You mean the S&P 500? Can you buy into the S&P 500 and then buy some more later? Yeah, you can. You can actually buy a index fund. So SPY is the S&P 500 index fund, and here in the United States, if you open up a brokerage account, you can buy SPY. There's other companies that also have S&P 500 index funds. Vanguard is another popular company that has an S&P 500 index fund. If you're not in the US, the S&P 500, first of all, is the most traded stock index in the world, okay, even internationally. So even if you're not in the United States, you should be able to get into an S&P 500 fund in your country. There's very, very few countries that do not offer the S&P 500. Like if you're a European investor, you probably have a portion of your money in the S&P 500. If you're an Asian investor, you probably have a portion of your money in the S&P 500. If you're a Middle Eastern investor, you probably have a portion in the S&P 500. It is one of the most diversely owned stock indexes in the world. It is like the gold standard when it comes to like stock indices. So it is readily available. All right. When I'm talking about a brokerage firm, what is that? A brokerage firm is like a company where you can open up a investment account. If you're not in the United States, it may be called something different. Maybe a bank. A bank might allow you to open up an investment account. I know in some countries, like in Europe, if you want to invest in stocks, you can just go to a European bank, and they can open you a stock trading account at a bank. Here in the US, some banks are in that business, but then we also have these standalone like brokerage firms. We have these like companies that all they do is brokerage business. I don't know how it is in other countries though. An example of a brokerage firm. Okay. Interactive Brokers is one. I use Interactive Brokers myself. I'll show you my interactive brokers. Yeah, this is my interactive brokers. So I use interactive brokers myself. There's also Charles Schwab. There is MetaTrader is one that's very popular overseas amongst like futures traders and also crypto traders too. They can trade on MetaTrader. That's a brokerage firm. Man, there's a lot. I mean, just Google brokerage firm and then your country, brokerage and your country. You will get a list of that. All right. So there's a lot of examples. So here in the US, I use interactive brokers. I also have a Charles Schwab account. Vanguard is another one. JP Morgan, Morgan Stanley. I mean, E-Trade. There's so many. There's so many examples of this. Very good questions, by the way. I'm just getting a flood of questions. So I'm just picking the ones that I think are the most relevant and just answering those. So very good questions, you guys. Keep them coming, and I'll keep answering them. And again, if you want to ask it live, you're more than welcome to do so as well. All right. Oh, wow. We're getting some more questions coming in. All right. So I'll get to that. I see a lot of people typing in. Thank you guys for being here. You could have been anywhere else in the world, but you decided to be here with me. And I do appreciate that 1,000%. All right. So let's move on. We got another question here. One of our members asked about a crypto question. So first of all, I mean, let's talk about the crypto market. We might as well segue into the crypto market right now. Right now, Bitcoin is recovering from some losses earlier from the week and last week as well. It looks like it's trying to come back up. Man, I mean, it's still range bound. I mean, ever since like February, it's been in this range. I don't see a clear direction in this. I do not have a swing trade. So I guess I should explain the difference between like investing and swing trading. So investing means you're buying and holding multi-years. You're thinking long-term. You may not even sell. That's investing. Okay. Or you're investing for cash flow. Actually, that is probably the most traditional sense of the word investing. When you're buying a cash flow producing asset at a discount, that is, I guess, the formal definition of investing. But investing is something that you do long-term. You buy and you hold for the long-term, multi-year, multi-decade. Swing trade is when you buy and you sell. You're buying it with the expectation of selling it in a short amount of time. And everybody's definition of short amount of time is different. Some people are like, oh, I'm going to buy it and I'm going to sell it in 5 minutes. I'm not a big fan of that because it's just trading one 9 to 5 for another, right? If you're sitting in front of your screen getting abused by 1 minute candles, that's like a 9 to 5, right? I trade and invest for financial freedom. I don't trade 1 minute candles because I'm just trading one 9 to 5 for another. Right. And I just don't want to sit in front of my screen and be abused by 1 minute candles. Some people, a short-term trade is like a 5 minute trade. For me, a short-term trade is something that can last maybe a week or two, maybe a couple days, maybe even a couple weeks, maybe even a month or so. Okay. So in that regard, in that short amount of time, like a month or two, like I don't really see a clear direction when it comes to Bitcoin. Okay. Now, long-term, I am accumulating Bitcoin. I'm buying like every month. Or every week, every 2 weeks, just a little bit, just a little bit. Like every, a couple of months, I'm buying little bits of Bitcoin. We call that dollar cost averaging. Why do we do that little by little? It's because I have no idea where this is going to go, man. What if it goes up? What if it goes down? What if it keeps going down? What if I buy a lot right now and it just keeps going down, right? Then I'm gonna wish I had some extra money that I didn't spend in this so that I could buy at lower prices, right? Well, gee, what if I buy it? What if I don't buy at all and this thing goes up? Well, man, I should have bought before, right? Now it gets rid of that temptations, that FOMO if it goes up, or that worry if it comes down. Because if it comes down, that means if I put a certain amount of money into Bitcoin every month, every week, and it goes down next week, great. Then I'm just buying at a lower price for next week's buy, right? Now, if I keep buying and buying and buying and it goes up, well, that's great because whatever I bought before has gone up. Yeah, I don't have as big a position as I could have, but at least I'm still participating in that move. So it's a win-win situation. So this is why we dollar cost average. And this is what you can do with the stock market as well. But anyway, I'm dollar cost averaging Bitcoin right now, little by little. When it comes to a swing trade, I just don't see a clear direction in this in the short term, in the like the next month. I have no idea in the next month where Bitcoin's gonna go. All right, and you're gonna hear that a lot. Like you may be thinking to yourself, like, Rooster, you're telling me that you trade, and you're telling me to ask you financial questions, but man, Rooster, you got a lot of I don't knows. Well, yeah, and you know why? It's because I'm being honest with you. Nobody knows the future, let alone people that are trading financial instruments. You think that guy at Goldman Sachs or the big banker at JP Morgan, you think they know the future? Do you think they know the future? They don't. Because if they did, if the big banks like JP Morgan, Morgan Stanley, Goldman Sachs, if they could predict the future, they would be the biggest companies in the world. But they're not. Banks are not the biggest companies in the world. The biggest company in the world is the one that makes your RAM chips for your all the AI slop. All the cat videos that are flipping burgers. Yeah, those memory chips. The company that makes that memory chip so that the computer can run and make that AI video. That company is the biggest company in the world. Followed by the company that makes your iPhone, followed by the company that makes Microsoft Excel, like Microsoft, followed by Google, Tesla, all these tech companies. Tech companies are the biggest companies in the world, not banks, not, because again, like, they can't tell the future. Nobody can. All right. And so that's why I say, and that is the most honest thing. Anybody that tells you that they know exactly where prices are going to go on a short-term basis, they're lying to you or they're crazy. All right. They're lying to you or they're crazy. Nobody knows. I don't know. You don't know. Nobody knows. Okay. So, and the thing is, you got to understand, as a trader or an investor or a capital deployer, you're not paid to be right. Let me say that again. You're not paid to predict the future. As a capital deployer or a trader, you are not paid to predict the future. You are paid to manage risk in uncertainty. That's what you get paid to do as a investor, trader, or capital deployer. Nobody knows the future, okay? So you're paid to manage risk and uncertainty. That uncertainty is what allows us to make money. If there were no uncertainty, if there was no uncertainty, if prices were 100% efficient, if we knew what true price was, the price would never move. It would always be stuck at true price. That means we would not be able to make money trading or investing. Right? It's because there is uncertainty that there is an opportunity to make money. All right? There's another quote from Sun Tzu, The Art of War. The Art of War is one of the best books on military strategy ever. It is a required reading for West Point Military Academy and most business schools, okay? The Art of War, Sun Tzu, there is a quote about uncertainty and chaos. All right, I'm gonna pull that up right now. And that quote is, in the midst of chaos, there is also opportunity. In the midst of uncertainty, there is opportunity. That uncertainty is what allows us to get that opportunity. It's what gives us that opportunity. It's that uncertainty. If we knew for certain where everything was going to go, there would be no opportunity. Okay? So you embrace that uncertainty. Embrace the fact that you're going to say, I don't know. And that's the point. The point is nobody knows. And that's why you're able to make money. Okay? I find that a lot of people who start in investing and start trading, they get into this really bad mindset of like trying to predict the future. And it's just like it's a really bad way of like looking at it's just a really bad way of looking at investing and trading. It's like you feel like you're so certain in it. And that's what causes people to actually make a lot of mistakes, because they feel like they're they feel for it, they buy into this story and they think they know exactly what's gonna happen, so they go all in on that trade. And all it takes is one mistake and your account is wiped out. So again, there is no such thing as certainty. There's no such thing. So manage your portfolio like as if you don't know. All right? And that's what's going to keep you in the game. Okay. Always be uncertain about everything. You have to be, because if you thought you were certain about something, you would go all in on it. And again, if you go all in on something and it doesn't work out, you're done. You're finished. Your account is gone. All right. So that's the point. You don't want to do that. Okay. Again, embrace uncertainty. Embrace it. Okay. Accept the fact that you don't know. Nobody knows. All right. And I think that's a very, very important mindset. I think most people fail when it comes to trading and investing because they got the wrong mindset. They're trying to predict the future and they're trying to make a lot of money too quickly. All right. If you're trying to get rich quickly, you will stay poor forever. I don't care if it's trading, investing, crypto. I don't care if it's in sports, in business, in life. If you're trying to get, if you're trying to be impatient and try to get to where you're going too quickly, you will fail. Okay. Any type of get rich quick, any type of things like that. If you subscribe to all that stuff, most likely you will fail and you will live poor forever. Okay. That's just how money works. All right. You have that. It really is mindset. All right. And okay, so enough of that soapbox stuff. Okay. As time goes, you will learn. All right. You'll either learn about that mindset or you're going to fail. So, I mean, either way, you're going to learn. You're going to FAFO. You're going to fuck around and you're going to find out. All right. So that's like in a nutshell, kind of like my outlook on crypto. I think I was talking about crypto and then I got sidetracked on some shit. But okay. So Bitcoin is going to go up. Or I'm sorry, not Bitcoin's going to go up, but I don't know if Bitcoin's going to go up. I don't know, but I am DCAing. I think long term it does go back up. But could that be like in a year or two from now? Maybe. It could be even longer than that, but I'm DCAing a little bit into this, in Bitcoin right now. And we'll see what happens. So that's my kind of crypto outlook. And the reason why I'm talking about crypto right now is because we do have another question here. One of our community members asked us about the 1099-DA, the 1099-DA. So if you are an American paying American taxes and you did any type of crypto transaction in a centralized exchange like Coinbase or even like Toro or Robinhood or anything like that, you're going to get a 1099 tax form. All right. There is a new 1099 for digital assets that you're going to get issued for last year. Okay, so it got issued this year for tax year 2025. All right. And a lot of people are freaking out because of, now it's an extra form they're going to have to fill out. And also, too, it records all of your stable coin transactions. It reports it to the IRS. All right. So I went to some different websites. I went to some different blog sites and different like commentary sites. One was from I believe this is from eToro. I found one from the company that makes QuickBooks, for tax records, the Intuit. So in there, a lot of people actually put like sample 1099 DAs. One dude even put his own 1099 DA on there with his personal information. I was like, oh my God. So one dude actually did. So I'm using some of those examples, but any type of personal information, I grayed out, I blocked out myself. So anyway, so this is like one way that you might see it. I know that the picture's kind of grainy. eToro, this is how it came out on eToro. But basically, it's going to say like your name, your address, all that good stuff. And then it's also going to say like your proceeds, like, how much profit you made from actual like cryptocurrency trades, like, going from Bitcoin to dollars to Bitcoin or Ethereum, or maybe you traded, different coins. Maybe you made some money on it. It's going to be on that section. But then also too, there's going to be a section where it talks about your stable coin transactions. Okay. And I'll pull up actually a better image of it. There's going to be one. Hold on. Oh, this is it. This is the one that I found on Intuit right here. Intuit on it's a company that makes QuickBooks, which is an accounting software. And one dude was like posting his like individual like stuff, and he actually posted his real 1099 DA from Coinbase. So most people, what they're worried about is this section 1B, where it talks about the number of units traded on a stable coin. So a lot of people thought that, because from previous years, when they didn't report, a lot of people thought that if they use their non-centralized exchange wallet, like let's say on their MetaMask or on their Phantom wallet, let's say all, they do all their like token conversions, like from Bitcoin or Ethereum or Solana or a meme coin into USDC with a stable coin. And then from USDC, they transfer that USDC to their centralized exchange. And from there, they convert it to dollars. They thought, because in previous years, if you did that, they wouldn't report anything, because it was just a transfer. It was just a dollar for dollar transfer. You just transfer USDC to your centralized exchange, and then from there, just converting it to US dollars and sending it to your bank account, right? For one-to-one conversion, right? And because it's that one-to-one conversion, there is no profit. There was no 1099s at that time, so everybody thought, okay, to convert one token to another, I'll do that on my MetaMask or on my on my Phantom wallet, and then the stable coins, I'll bring that over to the centralized exchange, and boom, no taxes. I don't have to report any taxes. That's what a lot of people thought. Well, starting this year, for tax year 2025, guess what? Now, centralized exchanges are required to report how much stable coins you transferred. Ooh, that's right. So in this example, this person transferred in $95,000 worth of USDC and then converted it to dollars and sent it to himself. Okay. Now here's the problem. Okay. So here's the problem. The proceeds are 92,000. So you see here, the number of units he actually transferred 95,000. The proceeds 92,000. Right. So here's what happened. Okay. So here's the problem now. If you did not report your cost basis, if you didn't report your cost basis, you may be on the hook to pay taxes on that full amount. The exchange for this year, for 2025, exchanges are not required to report your cost basis. That is on you as the taxpayer. That's your responsibility when you report. Okay? It's your responsibility to report your own cost basis for these transfers for this year. Starting next year, I believe, exchanges will be required to report that cost basis. Okay? Now, if you go to your Coinbase account, for example, I got a Coinbase account. So in the Coinbase account, every time you transfer money, you can actually go to the tax section, and you can go to each transfer, each transaction, and you can actually put in different like cost bases, like for example, like, oh, was this a payment to you, or was this a transfer to you? Was this this or that? So in that way, you can actually report your own cost basis, and you can do that. And if you did that, if you reported your own cost basis, Coinbase will have printed out. They will have also created a profit and loss statement for you. Okay. So what I did was, what I'm going to do is I'm just going to take my 1099 DA and that profit and loss statement, because I already itemized every single transaction, and all I have to do is send that over to my accountant, and he's going to say, okay, well, yes, I traded X amount of dollars of USDC, but my cost basis is about the same amount, because these are all just transfers to me back and forth, right? If that's your situation, that is. If that is your situation, okay? Now, if your USDC is from like gains from trading, then yeah, you're gonna have to pay taxes on your gains, right? But you have to know what your cost basis is, because if not, you're gonna pay taxes on the full amount. But some of that amount is actually your principal, right? So you shouldn't be taxed on that portion. So you have to be very diligent about reporting your cost basis, okay? A lot of people are freaking out because they're thinking that they're gonna get reported for this full amount. You have to fill out a form to amend this, okay? So if you I actually went to the IRS website. Now, I am not an accountant, okay? You should consult a CPA, okay, if you need advice on how to do all this, okay? I recommend it. If you're getting multiple 1099s, if you're starting to get 1099 DAs, if you're starting to get 1099s from multiple brokerages, you probably need to hire an accountant. You should probably hire an accountant to do your taxes every year, okay? Because at that point, you're getting to the amount of forms and complications so that you should probably be hiring somebody who's a professional at this, okay? And accountants are not that expensive. I mean, if all you have is like 1099s under your personal names, even if you have 3 or 4 of them, you know, you might find somebody, you know, for $500 to $1,000, you might be able to find somebody who'll do your taxes for the year. Okay. $500 to $1,000. If you're making like, you know, if you're making $60,000, $70,000 a year, it's really not all that much. I mean, it's for peace of mind and doing everything right. You know, I think it's worth it. I think it's worth it. But anyway, this is the form you're going to have to fill out in order to offset all those transactions and put in your cost basis. It's called the Form 8949. All right. And it says it right here on the 1099 DA that you can offset this using that profit and loss statement. Okay. And so right here, this 8949 is an IRS form. So you just have to tell your accountant, hey, yes, I transfer all these stable coins, but some of them are transfers. Some of them are not like profit proceeds. And the thing is, you can put in your cost basis using this 8949 form, because again, the exchanges are not required to report your cost basis this year. They're not required to do so. Now, the IRS knows that this is going to cause a lot of confusion. Okay, they know this. All right, they've already prepared for this, and that's why they released all these statements about the 1099 DA, because there was a huge amount of confusion when all these 1099 DAs came out like last week or a week and a half ago. There was a huge amount of confusion. Lots of people called in the IRS saying, what do I do about this? Do I need to pay taxes on all this? And they're like, no, you got to do an 8949 form. So yes, there is a form for you to fill out in order for you to report your cost basis on your stablecoin transactions. So I know a lot of people, actually multiple people asked about what do they do with that 1099 DA. So yes, you will have to report, you will have to add that 1099 DA to your tax reports, but at the same time, you can also do this Form 8949 to offset your cost basis for all those transactions. So this way you're not paying double taxes on your stablecoin transactions. Okay. Now, if you made money because of, and that's a stablecoin, if those stablecoins are profits from your trading proceeds, yeah, you got to pay taxes on that. But if it's part of your principal, if it's a transfer between your wallet to your wallet, if it's already after tax dollars that you're just transferring between your centralized exchange and your hot wallet, no, that does not count. That there's a cost basis to that. You can report that cost basis. Let's say you took $100 from your MetaMask and you transferred it to your centralized exchange. Well, you know, and it was just a transfer. It was not from profits from trading. Then, yeah, you received a $100 transfer, but your cost basis on it is $100 because you transferred it from your own account, right? So then it offsets it, it zeroes it out. So this is the form you're going to use to zero out some of those. So that you're not double taxed on your gains, so that you know you can report your cost basis and offset your gains with whatever money you put into that trade or that transaction. Okay. So anyway, your accountant should know how to do this. I actually called my accountant myself and said, hey, when we do our taxes, is this right? Like, we're going to have to do 8949. He's like, yep, we're going to have to do that. He looked over it and he's like, yep, this is it. When it's your time, we're going to have to do all this. So yes, this is it. All right. So again, it's not as complicated as what it seems. And again, I highly recommend you work with your CPA and make sure all I's are dotted and T's are crossed. But there is a workaround to this. You know, don't panic. Already the IRS has already put out some information about this, some clarification around this. So don't panic. There is a way. If all you did was transfer money back and forth, you're not going to have to worry. But again, work with your CPA. Make sure your I's are dotted. Make sure your T's are crossed. You don't want to get audited because of this. If you get audited, man, it is like months and months and months, possibly even years of just struggle. All right. So just don't do that. Don't get audited. Do the right thing. Dot your I's, cross your T's, work with your accountant. Make sure you do it right. Okay. So, but there is a way. There is a way. Okay. And so don't panic. All right. So that's that. That's that question on the 1099 DA. So Yeah, I don't think it's going to be a problem for most people. And again, all you got to do is just fill out those forms. There's a form for everything. I mean, the IRS, man, there's a form for everything, man. All right, well, let's talk about some other things, man. So yeah, today we're going to just go very, very basic. Just very basic. You know, today we just did a little bit of like a financial calculators, why we should invest, all those things. One of the things I know that a lot of people are asking, I got a couple of DMs about this, was like, you know, all the stuff that's going on in the world, like, you know, the Iran, the oil, like, you know, can you make sense? Can you please like explain what's going on? So, let me explain it in terms that's going to be the most relevant for most people. Because I mean, war is a terrible thing, and my heart goes out to everybody who's affected by the war, but most people just, like most people, at least in America, probably don't care. I mean, if it doesn't affect your daily life, why should you even care, right? It will affect your life. And let me tell you why. So first of all, I already told you one of the reasons is the oil price. Like, everybody uses oil. In America, a lot of us drive, all right? A lot of us drive. We heat our homes. It's still winter. Where I am at in New England, it's still snowing, all right? So, like, you know, we use energy, okay? So, energy prices are going up. You know, before the Iran situation, we were around $63, $65 a barrel. Now we're at like $93. It went all the way up to $120 a barrel last week, in last week's session. It dropped a little bit. Now we're going back up. There was apparently some 3 tankers got hit with missiles last night. And also, too, the U.S. confirmed that the Iranians are now putting like mines in the Strait of Hormuz. So you probably heard that in the news a lot. Like, what is this Strait of Hormuz? Like, where is this place? Well, in the Middle East, okay, there is this choke point where like 20 to 30% of the world's oil goes through this like one spot. All right, it goes to this one spot between Iran, Saudi Arabia, the UAE, the United Arab Emirates, and okay, let me pull up a bigger picture. Yeah, there we go. This is a Strait of Hormuz right here. So as you can see, here's Iran, here's UAE. You know, that's why you're seeing like Dubai, like all those buildings in Dubai getting like, you know, hit with drones, because it's literally right across the water from Iran. Qatar, Saudi Arabia, and you know, other countries here, Oman, and all this. So all this oil from Kuwait, Saudi Arabia, Iran, UAE, Qatar, Bahrain, all these oil producing countries, they ship their oil through this narrow strait called the Strait of Hormuz. Again, 20 to 30% of the world's oil goes through this one little choke point right here. All right, right here. All right. Now, here's the reason why oil prices are going up. It's because all the oil tankers that are going through, Iran has threatened to send missiles to them, all right, and bomb them in response to the U.S. and Israeli attacks on Iran, all right? So in their response, they're saying, okay, well, then in that case, then every ship that comes through the Strait of Hormuz, we're going to, you know, send missiles toward it, and we're going to set some mines all across it. So that is their kind of like retaliation for and their response to American and Israeli attacks, okay? So most of oil that comes out of Iran, Saudi Arabia, all these countries, it goes to Europe, and also it goes to China, okay? Europe and Asia, okay? Europe and also Southeast Asia as well. So all along here, also India too, all right? Now, because India, China, Europe, they cannot get their oil from here, guess what? Now they're going to have to get oil from everywhere else. And it's driving up the price of oil. Also, too, a big percentage of European natural gas comes from Qatar, right here, this country, all right? And their natural gas export hub is getting bombed by drones from Iran and things like that. So it's also driving up the cost of natural gas as well. So there's 2 natural gas prices that I like to track. There's the European one. I forgot what the ticker symbol was on TradingView. What was it? TTM? Dutch natural gas. TTF, that's what it is. TTF. Yeah, this is the European pricing on natural gas. As you can see, after the attacks on by United States and Israel on Iran, look at this. Boom! Look at that. I mean, it goes from like, so the European natural gas went from $31 all the way up to like in the 60s, and now it's at $51. Why? Because again, a big percentage of their natural gas comes from Qatar, and Qatar, I mean, the exporting facility got hit, and now they're not shipping LNG anymore, liquid natural gas. They're not shipping that anymore. So boom, European prices went up. We also have our own benchmark here in the US. We call it the Henry Hub. And Henry Hub prices, I mean, they're not as, again, these are US prices. So we produce a lot of our own natural gas here. We also get a lot from Canada as well. So that's not affected. But European prices are definitely up. And then when it comes to oil prices all over the world, oil prices are up as well. So this does affect people. And this is the reason why you're going to hear a lot about this in the news. Now, what people aren't talking about in the news is it's not really the oil price going up. I mean, oil prices go up whenever there is a conflict, but generally speaking, after about 6 months to a year, it comes back down. I mean, look at what happened to oil prices in during the Russia invasion of Ukraine, right? Right here during 2021, 2022. Yeah, it went to these levels. It went to $120 when Russia invaded Ukraine. But guess what? After about a year or two later, it went back down, right? Same thing. Most likely, energy prices are going to come back down here soon. But the domino effect is what can cause inflation to spiral out of control. It is not the oil price itself, but it is all the financial costs because of the supply chain disruption. What do I mean by that? Shipping costs and shipping insurance, maritime insurance costs are going to go. I mean, they've already skyrocketed. They have already skyrocketed because of this. And that is going to cause a domino effect. And that does cause sticky inflation. Usually the stickiest portions of inflation are service costs. Okay, so the cost of insurance, cost of shipping, cost of labor. These are the stickiest aspects of inflation. It's where inflation really like sticks. It like, goods and services, like when it comes to like goods, like, food, energy costs, they're very volatile. It can go up a lot, but it can come down a lot too. Services are not like that. Services, once they go up, they stay up for long periods of time. That is just the nature of service inflation. All right. So why is it that, so where is the real problem in all of this? I don't think it's really the price of oil per se. I think it's the price of reinsurance. So right now, the way that reinsurance works is like this. So let's say like reinsurance is like, in a very simple phrase, like, let's say that you're on an expedition, okay? And I am your main insurer. Like you're going on an expedition, something may happen. You don't know, something could happen, right? There could be a storm, you could get taken over by pirates, whatever, right? And so you come to me, I'm your insurer. You pay me a premium, I insure your expedition, okay? Now, what if your expedition and other people's expeditions that I insure, what if they all like tank, right? Well, I, as the insurer, need reinsurance, all right? So I buy insurance just in case if all of these bad things happen to me all at once as the insurer, at least I got an insurance policy that will pay me out for my risks, right? That's reinsurance, okay? So a lot of these really like a lot of maritime insurance works on reinsurance because the tail end risk of like a catastrophic like accident or something like that on one of these tankers could be very costly. I mean, we're talking like hundreds of millions of dollars, possibly billions of dollars of damage that could happen, okay? So because of that, they need to protect tail end risk, which means they need to utilize reinsurance. So a lot of these reinsurance groups, they heavily rely on this like single unified pool, and it turns out there's regulation that's related to conflicts. All right. So any policy insuring any vessel moving through a designated conflict risk zone must have reinsurance coverage to protect against that tail end risk. All right. And so the regulation stipulates that if it stipulates that if this conflict zone lasts longer than a certain amount of time, then the reinsurance group needs to raise capital to ensure that they can meet any capital demands from a catastrophic event. And they need to raise about 3 times more than what they usually carry. They have to raise 3 times the amount of cash, all right, in order to meet the regulatory demands. All right. Now that happens sometime later this week, early next week. It's like 2 weeks. They have 2 weeks. If they are designated in a conflict zone, they got about 2 weeks. If that conflict zone does not resolve itself, these reinsurance companies have to raise cash to show the regulators that they can meet any cash obligation from a tail end risk event. All right. So what do you think most of these reinsurance groups, what do you think their number one holding is? It's U.S. Treasury bonds. U.S. Treasury bonds are one of the most, are thought to be one of the most secure financial instruments in the world. Why? Because the U.S. doesn't default on their debt. Or historically, they have not. Okay, historically, the U.S. has not defaulted on debt. The U.S. is politically stable, or as stable as it can be in today's day and age, right? The U.S. has never been obliterated by war. You know, during World War I and World War II, those wars were fought outside of the U.S. theater, like outside of the U.S. They were fought in Europe and Asia and in the oceans. I mean, yeah, there's Pearl Harbor and things like that, but it never got to the mainland. It never got to the mainland U.S. All right. And so because of that, there is a certain sense of security when it comes to owning U.S. Treasury bonds. So when it comes to most institutions, most insurance institutions, pension companies, sovereign wealth funds, they hold a lot of U.S. Treasury bonds. That is their asset of choice. That is the reason why U.S. Treasury bonds are the collateral of choice in global trade. It is also one of the most liquid instruments in the world. All right. Now, they are holding all these Treasury bonds. So what do you think they're going to have to do if they need to meet this regulatory cash demand? They're going to have to sell those U.S. Treasury bonds. Now, something that some of you may not know, some of you may know this. If you are a macro trader, you probably already know when there is war, when there is uncertainty in this world, the flight to safety trade is to run towards US dollar and run towards US treasuries. That is the flight to safety trade. Whenever there was a big amount of war, like for example, this is ZN. ZN is the 10-year treasury futures contract. So as you can see here, you know, when right here, when Russia invaded, we were in a downtrend in treasury bonds. But even during that downtrend, when Russia invaded Ukraine, treasuries popped up just a little bit. Now, let's look at COVID. COVID was the last like big risk event. Look at what happened to treasury bonds. When COVID hit, when all the countries were shutting down their borders, look at what treasury bonds did. Boom, big ass rally, right? Why? Because again, flight to safety, right? Now, there's this war going on in Iran. Boom, treasuries went down. Why is that? Why is that? Well, there's 2 reasons. First of all, it's because the U.S. is going to be spending a lot more money. They're already in debt. That means they're going to have to issue even more debt. Issuing more debt means that inflation is going to go up, which means that interest rates need to go up. So because of that, that macro force caused treasury bonds to go down, because bond prices and interest rates are inverse. When bond prices go down, interest rates are going up. When bond prices are going up, interest rates are coming down, okay? They move opposite, okay? When the price of the bond goes up, interest rate goes down. Again, when bonds go down, interest rates go up, all right? So why is it that when there's this historical flight to safety trade, why is it that during a time of war, we see treasury bonds actually go down? They should be going up for flight to safety, right? Wrong, because again, that macro force. But the second thing is because a lot of these European reinsurance firms have to sell their treasury bonds to meet that cash demand, all right? They're going to have to do that. So anybody who thought that Treasury bonds was going to be a safe haven just got wrecked. They just got wrecked. All right. Now, if you've been watching my Twitter feed, you know that we've been shorting Treasury bonds on every pop. We've been shorting it, right? Because we saw this coming. We saw this coming in 2025. Remember, we started shorting Treasury bonds right here in this, like at the end of 2024 into 2025. After like the whole Liberation Day thing, remember we were shorting it on every pop. And I think outside of 2 losing trades, we won like, I think in the last year and a half, we did 6 or 7 Treasury bond trades, and only 2 of them we came at a loss, slight losses on both of those, but we made 100%, 200% plus every single one outside of those, right? So they have been one of the most profitable trades that we've had in the last year and a half is shorting Treasury bonds, okay? And the reason for that is, again, there's going to be a capital flight. Well, that was a whole different, that was a whole different thesis on capital flight. But we saw this coming. If you were in the Discord and everything, I explained that these reinsurance companies are going to have to sell Treasury bonds in order to meet that cash demand. And this is the reason why Treasury bonds have been selling off ever since that Iran crisis. And the thing is, this also affects you as a regular person. How does this affect you? Because not only is your oil price, your gas prices, and everything going to go up, your interest rates are going to go up too. So if you are on a variable rate, credit card, home equity line of credit, business credit, your mortgage, whatever it may be, if you're shopping for rates, you're going to be paying more. Your credit card rate probably went up. If you got a variable credit card rate, your credit card rate probably went up. Your mortgage, if you're shopping for a mortgage, you probably got quoted for a higher mortgage rate in last week than you did like in a month or 2 ago. Okay, this affects everybody all over the world, and also too, when there is more global conflicts, interest rates tend to go up during times of global conflicts, not like one-off, like a surprise conflict, but when there is a trend, when there is a long-term trend of increased militarization around the globe, you start seeing over a long period, over a multi-year time frame, you see interest rates going up. And why is that? Well, it's because when there's global conflicts like this, capital moves with more friction. There's less capital competing for every credit deal, right? Which means to attract more credit, the borrower has to pay more in interest. Okay, so now that's getting a little bit complicated. Okay, let's keep it simple. Let's keep it really simple. Interest rates are going up. Okay, interest rates are going up. All right. The reason why interest rates are going up is because the people holding a large amount of this are going to have to raise cash if regulators don't step in. Now, is it possible that regulators step in and say, you know what, this is no longer a conflict zone, or, we're going to give you an extension or something like that? Is that possible? It is. Is it likely? No. Is it possible? Yes. So we're going to have to see. So that's why, like, day by day, I don't know what's going to happen to this. But let's say the regulators don't come in. And let's say this conflict just keeps going on and is still unpredictable, and Iran's still doing what it's doing, like laying mines and bombing oil tankers as they cross through the Strait of Hormuz. A lot more European reinsurers are going to have to sell way more Treasury bonds. This could really come down hard. And which means that interest rates are going to go way up. So this is interest rates. So the actual price of the bond, this is the chart of the price of the bond. This is the actual interest rate. So as you can see, it's inverse of one another, right? As the price of the bond comes down, interest rate is going up. All right. So interest rates right now are at 4.22%. Before the Iran conflict, we were under 4% on a 10-year Treasury interest rate. Okay. The 10-year interest rate was under 4% before the conflict. After the conflict, now we're at 4.22. I wouldn't be surprised if we start seeing like 4.5s coming here pretty soon. All right. I wouldn't be surprised if we saw 4.5s in the next like 2 or 3 months. I wouldn't be surprised at all. Maybe we see a little bit of drop first. Maybe some good news comes out. Maybe Trump comes out and say, "Oh, mission accomplished." Remember George Bush, mission accomplished for Afghanistan. I don't know about that. I don't know about mission accomplished right now. But all right. Well, let's say he comes out with it, and let's say the market is like, celebrates it or whatever, and it causes the treasury bonds to go down a little bit. I still think it comes back up. Maybe after that into like 4.5 or so. And that affects everybody. That's going to affect your savings rate. That's going to affect your credit card balances. I mean, if you have a variable rate on your credit card, you're going to pay some more, and this affects everybody. So there's going to be a lot of pain, and some people are going to feel some pain because of this. All right. And it's, I hate to say it. I had to be the bearer of bad news, but man, if this interest rate really starts going up, you might see also small businesses start failing at a larger and larger number. Why? Because a lot of small businesses operate on revolving credit. And when you have revolving credit, it's usually a variable rate. And when interest rates move up too quickly, a lot of small businesses can't absorb that hit that quickly. They just can't. All right. And so we might start seeing, small businesses really suffer if interest rates keep going up and up and up. And again, that's something that I'm going to be monitoring. I do get certain data. You can actually mine data. Actually, Reddit is a very good place to mine small business data. A lot of small business owners like to go on Reddit and talk about what they're doing and things like that. So a lot of small business and economic indicators are built off of Reddit APIs and scraping of Reddit data. It's actually funny. I know an institutional trader. He works for certain hedge funds, and he told me that they have a bot that scrapes Reddit for sentiment data, and it's a common practice actually amongst hedge funds. So yeah, they're right, and he also shared that to me too. He said there's so much negative sentiment amongst small business owners right now on Reddit, and usually he said this extreme negative sentiment in their own business usually happens right before a huge amount of failures happen. So, I mean, I'm not an expert on that kind of stuff, but that is something that I did hear from people that use that type of data. So that's going to be pretty interesting to see. Also, too, people like Ed Yardeni. Yardeni is a pretty good follow on Twitter. I follow Yardeni a lot. Yardeni also came out with some research. He's like a big fund manager. I think most fund managers are bullshit, by the way. I remember I told you in the beginning of the live stream, 99% of fund managers can't outperform the S&P 500. Yardeni is one of the good ones. He's one of the really, really good ones. And I love his research. He does some really, really good research. And he came out in an interview a few days ago, and he's saying that he rarely sensationalizes things. He's very calm and cool-headed, and he really hates sensationalist language. But about a few days ago, he was on an interview, and he said the chance of an economic catastrophe has increased. He did say that. Okay, and he rarely uses those words. Okay, he rarely uses those words. He's a very data-driven guy. He rarely says anything sensational like that. And he just came out and said the chance of it has increased. He didn't say outright it was going to happen. He just said the chance of it increased. But knowing Yardeni and knowing how tame and cool-headed he is, the fact that he said that means it must be something. Okay, so even Ed Yardeni mentioned that, and again, I don't really think it's going to come from oil per se. I mean, it's related to oil, but I think it's more based on that maritime insurance and the shipping rates, the long-term inflation that's going to come out of that, plus the insurance companies that are going to have to sell treasury bonds. And when interest rates spike like that, you could see liquidity gets sapped out of the market. All right. And so you might see some real big volatility in the markets in the coming days into next week. I actually think it's a very good chance that sometime between now and March 23rd, 24th or so. That's, you know, after next week, after the monthly options expiration for the S&P 500. If you don't know what that is, I'll go over that someday. But I think between now and March 22nd, 23rd, there's a very good chance that we might see excess volatility in the markets. Now, if it happens, it happens. And I got some buy orders ready to buy that dip if it dips far enough. I got something ready for that. Am I going to try to get in front of that and try to like short the market in front of that? I mean, if we see a big enough rally, I might do that. And again, I'll like I always do, I'll share those trades with you in the Discord. I just don't see anything like that. I would rather just sit tight and wait for my opportunity, an opportunity that I understand in order to jump in. But without a major rally, I am not shorting this. And without some sort of clarification, I may not even place a trade. So, but I do know that if we do, if we see that volatility and if we see the stock market really drop hard, you know what I've been talking about for the last few weeks. I'm buying some Brazil. That's for damn sure. I'm going to be buying some Brazil. So I've been buying Brazil. The Brazil ETF, it's EWZ. We've been in this. We've been in this since the summer of 2025. I've been talking about getting in this since the end of 2024, okay? We've been talking about this for years, getting involved in this, all right? And we finally got our price. We finally got our conditions around summer during that whole Liberation Day tariff, all that nonsense shit. And it just sent these Brazilian stocks down because the whole fight between Trump and Lula is the president of Brazil, the whole fight they had over Bolsonaro, stop hurting my friend, I'm going to tariff you. Then 2 weeks later, Trump did the taco. You know, Trump always chickens out. He chickened out because Brazil is just one of those countries that is unsanctionable, all right? They make too many soft goods that everybody wants. Soft goods, like soft commodities like orange juice, coffee, meats. They're one of the biggest food exporters in the world. And if America doesn't buy that food, guess what? There are countries that are willing to take that order and even give Brazil some concessions for it. So when US put tariffs last year on Brazil, Brazil just rerouted all those orders to China and India. And remember last year, coffee, meat, grain prices went way up in the grocery stores. It got so bad that Trump, 2 or 3 weeks after those tariffs, he had to take it back. He was like, oh, we're not going to. And he didn't say, oh, we're going to take off Brazil's tariffs. What he did was he took off the tariffs on all of Brazil's exports. Bananas, oranges, coffee, grains, meats. It was pretty much like all of Brazil's exports. So everybody in the investment community knew. It's like, oh, he just reversed the Brazil tariffs. Like he just pretty much reversed the Brazil tariffs because that country is just unsanctionable. It is untariffable because their exports are in such high demand that if one country doesn't buy it, there's gonna be a whole list of countries that are willing to take that and gives concessions for it. So it's just, and that was part of our thesis. That was why I said, yo, Brazil is going to be the winner. And it was. I mean, if you compare Brazil to like S&P 500, all that stuff, it is way outperforming. I mean, shit. I mean, we can just do that experiment right now. Look at this. This is the S&P 500 is the blue line, and the Brazil is the candle chart. And ever since 2005, I mean, look at the difference. Look at the difference. Since 2005, S&P 500 is up only like 12, 13%, but Brazil is up 65%, 5 times more return. They're holding on to the S&P 500. All right. Everybody was talking about bear market, this, well, all the crypto people, you cryptards. All right, we're talking about bear market this, bear market that. And I was telling you guys, man, there's always an opportunity if you know where to look, right? And this is why I told all those guys from Spaces when I did X Spaces with those crypto guys, I told everybody, man, look at other markets too, man. There's more than just one market, right? You just got to know where to look. There's always an opportunity somewhere. You just got to know where to look. And so those of you guys that were in crypto and just always were hard set, oh, only crypto. Well, you guys got effed in the A. I mean, literally, you got effed in the A because like you're down 28, 30% if you're 100% in Bitcoin only. And let's be real, You trenchers are not in Bitcoin. You trenchers are not in Ethereum. You trenchers are not in Solana. You guys are in meme coins. Your meme coins are down 80, 90, almost 100%. Right? But, and I told some of you, and I remember when we had those Web3 poker nights, I remember telling people about Brazil. And I remember being made fun of and laughed at. Oh, Brazil, that's boring. I don't want to do that. That's boring. All this stuff. Yeah, is 65% positive return, is that boring while your ass is losing 30, 40, 50, 80, 90%? I think it's pretty exciting. I made money. I made a lot of money on this one, man. Remember, we got into those leap calls too, so we actually tripled our money on this. Yeah, and we sold half of our position right here at the top. Remember, we sold it, and I got receipts. You could go to the Discord, look at the receipts, look at the timestamps on those buys and sells. You know, we got a pretty good exit out of half. Well, now I'm still holding on to half the position because I still think this is going to go up. And now with oil prices going up, remember in the beginning of the year, I was giving you guys like my price targets for end of 2026, 2027, end of 2027. I was giving you my price targets for end of 2027. I remember saying like 65, 70. Bro, if oil stays at $80, $90, $100 for the next 6 months to a year, no. We're looking at $80, $90, $100 on this EWZ. All right? Because most of this rise in Brazil's stock market in the last couple of months has been centered around Brazilian banks. Brazilian banks have been lifting the whole index up. Yeah? Brazil also has very, very large energy companies. Some of the largest energy companies in the world are in Brazil. And if they start participating in this rally, oh my God. I mean, GG's. I mean, we're going to make a fortune out of this, you know? And this is the type of trade I like. I like these multi-month uptrends. These like monstrous, like you know, like the train that's coming. You know what I mean? That train, like you do not want to step in front of that train. This train is going, it got momentum. It is on a tear. This is the type of trade I like. I don't like the day-to-day, second-to-second, minute-by-minute trade. What I like is I like to buy right. Again, we got in around right here, around this July, August. We buy right, and then we sit tight. Again, we got around here. It was like around July, August. Again, check the Discord. Look at the timestamps. Look at my X. Look at the X timeline. All of that. You can actually see when I bought because I post all that stuff live. All right. But anyway, we bought it here. We bought right, and we sit tight. This is the type of trade I like. And we got into some leap calls. We got into some 2-year call options on EWZ, and they have more than tripled. And that's the type of trade I like. I like this kind of trade where we just buy right, we sit tight, we go fishing, we come back, and we just got money. All right, that's the type of trade I like. So yeah, this is going to continue. And again, we sold half of our position up here. I'm willing to rebuy and get into a full position if this thing gets it to like $31, $32. It's got a long ways to go. And you may be thinking to yourself, oh man, like, you know, in a bull market year, why would it come down so much? It's one of those things about emerging markets. It's a feature of the Brazilian stock market. I mean, if you could take a look at all these, like, you know, past years. Like, for example, look at this. Look at 2007, okay? 2007 in Brazil. So in 2007, Brazil went from here to here in a year. That year, so 2007, Brazil did 77% as an index. 77% it went up. But in that same year it went up 77%, there was a 2-month period where this thing fell 33%. From, what is it? From July to August. From July to August, this thing fell 33%, only to regain it all within another month and then exceed it by the end of the year. So even in a year where it did positive 77%, in the middle of the year, there was a 33% pullback. It is just one of those features of the Brazilian stock market, of most stock markets in emerging countries. It's just one of those things. There's a lot of volatility. Lots of volatility, okay? So I wouldn't be surprised if this thing has a 20-30% pullback and goes down to $31-$32 sometime this summer, maybe even earlier, maybe even around next month, maybe even now around April. But anyway, I got a half position. So even if it keeps running to the upside, it's okay. I got a half position. I'm still participating in it. If it comes down, boom, I got some fresh powder. I'm ready to get in too. So win-win, all right? Risk management, I don't know. So again, it comes back full circle. I don't know. I don't know which way it's going to go. It could go up. It could go down. But I'm ready for whatever. I'm ready for whatever. I'm ready for the worst case outcome. I'm ready for the best case outcome. This is how money is made long term. Okay? Managing risk in uncertainty. That's how we get paid. Not to tell the future. I don't know. Nobody knows. Nobody knows. All right? So in that environment where nobody knows, you have to manage risk. And this is how I manage risk. We take some profits. After it goes up a lot, we have some dry powder on hand just in case if it pulls back, then we're ready to buy more. But we still have some of the position there just in case if it just keeps going. Okay? Win-win. I know my plan for all outcomes. So I don't have to really predict the future. I already know what my worst case outcome is. I know what my best case outcome is. And we just manage everything in between. Okay? That's how money is made amongst professionals. All right. Anyway, so there's that. That's that EWZ. And also too, we got into UPS. We got into UPS around this $97, $98. It went up to 100. Now it's coming back to 99.87. Boo. We're also in Alibaba. This trade did not work out very well for us. This one and the Treasury bond trade in the last like 3-4 weeks has not worked out for us. I mean, the Treasury bond trade has started working for us after the war. But before the war, it was going up. We were shorting it, remember? We shorted it around here, actually. So we were kind of underwater. It went up like this. And of course, I got out too early when the loss was very, very small. I was like, fine. I'll get my money back and just take a small loss. I should have just held it because I think we would have made money in the last 2 days. But it is what it is. I mean, risk management. Again, nobody knows. So I just managed risk because there was only 2 weeks left on my spread. When it comes to options, when it gets closer and closer to expiration, it becomes harder to manage that risk. So sometimes if I don't have much time left on an option, I'll just like close it out and just move on to the next trade. So it is what it is. My biggest trade and my biggest thing that I'm looking at is Brazil. I mean, you could just buy right and sit tight with Brazil and just make a career out of just that for the next year or two. I mean, literally, the opportunity in this is just ridiculous. It's so asymmetric that, man, I've been saying Brazil like almost every day, every space, every day in the Discord. Like, I don't know how much more I can talk about Brazil. I just don't know how much more I can talk about it, man. I mean, I've been talking about it so damn much. Also, too, in the currencies, we got also involved in Japanese yen. Oh, man. I mean, we got into some Japanese yen options around here or so, but it's, we'll see. It's not that. I mean, we're in about a little bit of a drawdown, but not too much. Actually, this goes into my next thing. Remember in the beginning of the show, I said that we were going to talk a little bit about a new DEX. And since we're talking about currency trading, I might as well talk about it. So, my boy, Bankyo, shout out to my boy Bankyo, by the way. He educated me about this new platform called HertzFlow. Okay. So first of all, let me go ahead and like maximize this. I'm gonna turn off my webcam. And I'm gonna maximize this so that you could read it better. But anyway, Bankyo introduced me to this. I am not part of HertzFlow. I was not paid to do this. I'm not part of them. This is not a sponsored segment, nothing like that. I'm not being paid by them. I'm not part of their team, nothing like that. It's just a new platform, and and they asked me to test it out and give them feedback on it. All right, that's all it was. So I tested it out, and let me tell you, man, I think this could be the next big DEX. Okay, it's called HertzFlow. All right, and you can actually go to their You can actually go to their X. They got an X page. They are actually backed by YZI Labs. And this is actually what got me really, really curious about this, because YZI Labs used to be called Binance Labs. For those of you who don't know, YZI Labs used to be called Binance Labs, is the family office of CZ, the founder of Binance, which is, you know, one of the largest centralized exchanges in crypto in the world, okay? So CZ is the founder of it, and his family office is YZI Labs, and his family office is backing HertzFlow. So already you got a big name like CZ backing this. Already it's got my attention, okay? So that's why it got my attention, and I was like, okay, let me test it out, let me see. Now, one of the things that I think is like the biggest surprise, and again, in this, you can tell in this account, I actually shorted Japanese yen as well, as you can see. But anyway, so yes, this is a project that is backed by CZ via YZI Labs, which is the family office for CZ, who's the founder of Binance. And let me tell you, man, I think this might be the next big DEX that you see all over your timelines later on in 2026. You know, just like last year, we saw Aster, Hyperliquid, and Extended, like all over the timeline. I think this year, later this year, you're going to see HertzFlow all over the timeline. And here's why. More and more, RWA tickers and like real world tickers, non-crypto tickers like Forex, S&P 500, equities, indices, stocks, commodities, these are more and more traded now on DEXs. Basically, crypto is being used as a guardrail, as a platform to trade all of these traditional tickers, all right? Yes, in DEXs, you could still trade Bitcoin, you could still trade all these like crypto tickers on leverage as well, but where I see the biggest opportunity is for people to participate in markets where they could not do so because of regulatory hurdles. What do I mean by that? Like if you're in the US, I mean, you know, yeah, if you're in the US, you could participate in the S&P 500. You could participate in all of these like dollar pair Forexes, you know, just by opening up a brokerage account, right? For other people around the globe, it's not as easy. If you're a European resident, European citizen, Asian resident, Asian citizen, African, whatever, Latin American, it is much harder to get involved in certain US markets because it's harder to open up that brokerage account because you don't have the necessary IDs. A lot of brokerages that are in the US also don't have licenses to work with foreigners and foreign accounts and things like this. So it becomes a lot harder. It's not as easy for a foreigner to get involved in US markets. And I think one of the biggest things is that DEXs that have these decentralized exchanges that have these equities and S&P 500, NASDAQ, you know, stocks like Tesla, Meta, Google, Apple, you know, and all these other Forex pairs and, you know, gold, silver, and commodities and oil and all that. The DEXs that allow a bigger range of these RWAs to be traded, I think are the ones that are going to win, okay, in the end, all right? And you can see on some of these DEXs, there's more, like, you know, like if you combine like all the RWAs, like, you know, the S&P 500, the NASDAQs, the indices, like, you know, all those things I just mentioned, if you combine all the trade volume and all of that compared to the crypto tickers, some of these exchanges are actually reporting higher numbers for these RWA assets than they are for crypto assets, even though it's all on the crypto guardrails, all right? So you could just think of crypto as now, it's just like the technological platform in order for you to execute these trades. And one of the things that it was really, really cool to see in HertzFlow was that, man, they have a huge selection of Forex pairs that you could trade. You could trade the euro, the USD/JPY, Australian dollar, you know, Turkish lira, British pound. You got the Singapore dollar. You got the Swiss franc, Canadian dollar, Indian rupee, and then the Brazilian real. All right. So if you look at any other DEX, they do not have this expanded list of Forex pairs that you could trade. Okay, they just don't have it. And let me tell you, man, Forex right now is where all the movement and volatility is at. Man, if you are a volatility trader, Forex is like your domain right now. Okay, so I mean that's great. And also too, they got the equities as well. I have on good authority, I've heard that they're going to be adding more tickers. I think right now, because right now this is like the kind of the test net phase. And during the test net phase, you know, they just put like, you know, most of their tickers or some of their tickers. They didn't put it all in. And from what I hear, they're going to be adding some more. There's equities. I mean, you could trade Tesla, Apple, Nvidia, Google, and also too the S&P 500 and the QQQ. This is the NASDAQ ETF. This is the S&P 500 ETF. So all of these are now tradable. And of course, they've got your crypto tickers and your memes as well that you could trade on leverage. They even have commodities. So I mean, the real standout is the amount of Forex pairs in the testnet. Now again, if they build out the equities and they put more equities and indices on this, I mean, I think wow. I mean, there's nobody's close to having this many RWA tickers, and I think this is going to be a huge game changer. I think people are now able to get involved. Now, some of these other dexes that I've seen, they have like one or two of these, but they don't have 1, 2, 3, 4, 5, 6, 7, like 10. They don't have 10. There was a few that I checked. There was one dex that had 2. They had the euro and the yen, but they didn't have the rest of these. So you're able to now trade all of this on Hertz Flow. So I think, guys, you should go to Hertz Flow's X page. They have a link tree on here, and you can actually go to their Discord. Oh yeah, you can go to their Discord and you can ask to get a code to start trading on Hertz Flow. And I recommend you guys do that, even if it's testnet right now, because it gets you acclimated and it gets you prepared for the mainnet launch so that you can get, comfortable with the controls and things like that. And let me tell you, man, everything about, everything about this is very, very intuitive. It's very, very easy. I mean, it's standard. You put your order in here. You can put a limit order or a market order, and then you could preset a take profit and a stop loss and actually input them in here as well. And as you can already see, I already placed a trade yesterday. I got into a trade and I set my stop loss and my take profit as I was entering my entry trade, and it did all of it at once. So it entered my trade and it set up my stop loss and my take profit all in one click. And I was able to do that all in one order flow. And also another cool thing here is I can actually move the take profits and stuff just on the chart. So if I see like, if I want to like make an edit, like say, man, you know what? Let me like raise up my my take profit. I can actually raise it up just by using what's on the chart. Well, I was able to do it earlier, but I don't think now it's working. But right now it's still on testnet. So there's things that they're gonna have to like fix on the UI and things like that. But so far, so good, man. And I really recommend you guys to take a look at this and start, playing around with it, start placing some trades on this, because I think when mainnet comes out, I think this is going to be the next big DEX. Also, it's backed up by CZ. All right, it's backed up by CZ and YZI Labs. Also, too, it's got the most Forex pairs that I have seen out of every DEX. And I think just for that, this could be huge. Right. And, Forex is a huge opportunity. And also, too, with Forex trades, even if you are an American and you're able to open up a Forex account, a lot of Forex accounts come with all these restrictions and you have to have a certain minimum balance and things like this. With Hertz Flow, you don't need to have any minimum balances. You don't have to buy like full lots. Some brokerages will force you to buy or force you to trade full lots at a time. If you don't know what that means, full lots, just know that it takes a lot of money. It takes quite a bit of money to use some of that leverage and when you're actually doing Forex trades on a traditional brokerage account. But here, there's none of that. I can start with as little as I want, trade as little as I want. And another great thing is no KYC, none of that. So I don't have to actually go through and give my ID to somebody to open an account. This is all, if you have a wallet, boom, you can start trading, okay? All you need is a MetaMask wallet. If you got funds in a MetaMask wallet on a Binance network, boom, you can start trading. So you don't need no KYC, no waiting periods, nothing like that. So that's cool about this. Um, and yeah, I think this is a great platform to go on. Actually, you know what? Let's do a live trade. Right now, this is testnet funds. So I mean, if we take a loss on this, whatever. I mean, it's like testnet right now. I'm just practicing on it. So when mainnet does come out, I'll already know all the functions and everything, and I can start like going crazy with it. But the market is about to open in about 8 minutes. So what we can do is maybe place a trade. Maybe when the market gets off, or when the market opens, we'll place a trade on this, and I'll just show you how easy it is to place that trade. Right now, the market is not open. The market has about 8 more minutes left until it opens. So in about 8 minutes, we'll go ahead and place a trade, and I'll show you guys what it looks like. And yeah, we'll do everything at once. We'll do like a limit order with a take profit and stop loss all at once, and I'll show you what it looks like. But yeah, we can trade some equities. You know, one of the things that I saw too that was these individual stocks. I think that's pretty cool to trade individual stocks. Let's actually take a look at the charts of these individual stocks and see which one we want to play. Do I really want to play Google right now? Oh, everything is starting down. Whoop. All right. So wait, there's Google. Let's see. Google. What was the other equities that were involved? There's Google, Nvidia, Apple, and Tesla. Okay. So Tesla. Ooh, okay, Tesla. Nvidia. Oh wow. That does not look good. And Apple. Everything's starting down today. Okay. Interesting. QQQ also starting down today. Oh my goodness. Okay, so we might see some volatility here. I don't know, man. I don't know if I should go up or down today. Let's just do a long trade. Let's do a long trade today. Okay, let's do a long trade. Why? I don't know. It's already starting down. Maybe it pops up. Maybe we take some profits. We'll do like one of those like DJing trades where like we're in and out within like an hour. You know, we'll do one of those. Okay, we'll have a tight stop and we'll have a tight take profit. Maybe we do it on the SPY. Okay, so we got about 7 minutes and we will trade the SPY. And we'll go from there. Some of the other things that are happening, while we wait for that, let's go over some of the other things that are happening. I know that some of you guys asked about some of the other trades that I'm in. Honestly, like outside of what I put on Discord, I haven't really placed that many trades just because I'm just trying to be very, very disciplined and patient about entries into different parts of the market. You know, and you know, for those of you guys that are not active traders, you know, if you really want to start on some of those things that I talked about, like dollar cost averaging into like the S&P 500, these periods of volatility are some of the best times to start because you're getting in at a lower price. All right. So if you guys were on the fence about starting to invest in the stock market and things like that, this is not a bad time to get started. All right. Especially with all this volatility. This could be a very good opportunity to get in at lower prices and really like understand how market volatility works. So it could be a very, very good lesson in that. So something to think about if you guys want to, start doing that. This may not be a bad time to, to get involved in those markets and really dollar cost average. And again, when you dollar cost average and when you invest, please don't invest in some dog shit company. Like don't buy some trash. Like one guy, like, man, I remember I was talking to somebody about dollar cost averaging and they were talking about micro strategy that I can't even believe I'm talking about this. The Michael Saylor Bitcoin company. Man, I mean, okay, I get it. There's some like big fanboys out there for Michael Saylor and all that, but that is not that micro strategy or whatever you want to call it is not a quality company. It is a very leveraged, risky, speculative company. Okay. We're talking about long-term investing here. All right. You want to be disciplined. You want to buy quality. Okay. You don't want to buy some trash. All right. That you could potentially lose a lot of money on. All right. You don't want to be doing that. You want to buy quality. All right. You don't want to be losing money on something stupid like this. All right. Don't lose money like at all if you can. So you want to buy into quality, right? Because here's the thing, like, let's say you buy something like MicroStrategy and that thing dumps like 20-30% in a week. And you may be thinking to yourself, like, is that even possible? Yeah, this thing is possible. I mean, this thing, all it is a Bitcoin holding company. So like, if you actually put like this with Bitcoin, if you actually overlay the two charts together, man, I mean, this is like, what happened? This one. Yeah, that one. I need to get rid of the blue one. Oh, damn it. This one, yeah. Okay, so yeah, there we go. So okay, so if you've been buying this like ever since like 1010, ever since the top of Bitcoin, like here's the thing. So if you bought Bitcoin at the top, you'd be down 40%. But if you had bought strategy at the top, you're down 70%. You're down an additional 30% on top of Bitcoin. All right. And the thing is, it's just that much of a bigger hole that you got to dig yourself out of, right? You know, and even Bitcoin as a quality asset, I mean, that remains to be seen. I don't want to say for sure that Bitcoin is a quality asset. I mean, I'm dollar cost averaging into it in the long term. But by no means is it my biggest position. No, it is not. It is actually one of my smaller positions. Okay? I am dollar cost averaging for the long term, but it's one of my smaller positions. Because it is speculative. It is speculative, you know? It could drop more too. You know, I think long term it does go up, but who knows? Bitcoin could drop to 40K. Right now it's at 60K. 60 something K. So if it drops another 30K from here, that's like 40%. It could go down another 40%. What if it does? Right? I don't want to be holding on to that. So, or if I am holding on to that, I don't want to be holding on to too much of it. All right. So, you know, again, uncertainty. You got to manage risk. That's what I see with Bitcoin. But anyway, my point of all that was if you are going to start doing this long-term investing, buy quality assets. And again, I think the S&P 500 is a great place to start. It is a great forever asset. Never bet against America. It has never been profitable to bet against America. It has never been profitable to bet against America. And when you buy the S&P 500, you are buying a cross-section of the most profitable companies in America. All right? I think it's a great 10, 20, 30-year bet. It is. Okay? Long term, though. Long term. Dollar cost average. Hey, this could come down too. Yeah? But this is not as a speculative asset as Bitcoin is. So I'm willing to go a little bit heavier on something like this, like S&P 500 and things like that. Anyway, we're about to get started. It's about to be 1 minute until the market opens, and I would love to get involved in one of these trades on Hertz Flow. We're going to do like just a quick trade. I just want to show you guys what it looks like and how it executes and how you can set up an order so that you guys can do it yourself. We're about to get started here. And yeah, well, let's place an order. We'll place an order, and hopefully it triggers. And this is not how I usually trade. Like if I were to trade short term, I would not do it this way. Just because like, you know, I usually like to set my levels like way in advance, but I'm just trying to get something to execute so you see it. Okay. So anyway, oh, it looks like we're in. It looks like we're in. All right. So we're going to go. Let's see here. Ooh, market started going down. Dang. Okay. Okay. All right, let's see. I'm going to try to pick a spot here. Yeah, let's just pick a spot right here. I mean, it doesn't really matter. This is for educational purposes anyway. This is like testnet money, which is not even real money. It's testnet money. Again, it's testnet right now. So, you know, they were getting me to test it out and everything. So let's see. Let's do a limit order. Let's just do it really close to market price so that it just executes really quickly. We'll say 67.80. How much am I paying? I'll put $20 in it. 50x leverage, take profit. Let's take profit around opening price like 676 or so, or let's say 675. Let's just say 675. And then stop loss. We'll keep the stop loss real tight. Let's say like wherever this is, 66821, 668. Let's just say 668. Okay. So I'm either gonna make $5 or or lose 4, something like that. Yeah. Oh man, I can already see it's coming down. So let's. Dang, is it coming down fast? Ooh, it's coming down fast. Okay, so let's go to like 33, maybe 30, something like that. Oh, now it becomes $6 to 2. Okay, 2 to 1. I can take a 2 to 1. Ooh, it's coming down again. Okay, let's see if it will go down to 10. Yeah, let's do it. Parameter is missing. What is missing? I put the stop toss, the 6, 7, 10 limit. 675. Required parameter is missing. What is missing? What is missing right now? Oh, because my limit price is 2. It was over. Ay. Oh, maybe it was this. Yeah, it was that. I didn't set my margin. Was that what it was? Required parameter is missing. What is missing? Okay, what if I do it as a market order then? Huh. It's not working. So, okay. Well, it's not working right now. Required parameter is missing. Okay. Well, that sucks. Let's try a different market. Maybe it's just because that market is not working. And again, I mean, that's normal in testnet for certain things not to work, like, you know, because nothing is live yet. They don't have like actual market makers. These are like simulated. I know that that the Forex has worked. I mean, we can always do a Forex trade. Let's go long on it, I guess. We can go long. Take profit. We're gonna take profit around like 115 or so. Like, yeah, 115, 115. 1 like we could say like 116 or 117, say, and then we could take a stop loss at like 1.15. It's a $3, and then just do a market order. Yeah, sure, go ahead. Okay. I don't know what's going on, but maybe it's because my wallet hasn't updated yet. Let's see. Maybe my wallet hasn't updated yet. No, it's updated. Let's try to spy again. Let's try the spy again. All right. So yeah, okay. Because of this volatility, I'm just gonna go ahead and just go do a long on a market order. We're just gonna do a take profit here. We'll just do a take profit at like 675, and we'll take a loss at like 668. And like I said, and then we'll put like a $20 on it, and we'll just go long. Okay, I don't know why it's not working. I'll send it to the team and say why. Okay, so again, this is testnet. This is the beta right now, and again, I've been a part of lots of beta tests, and during beta tests, these things happen, and that's why they do a beta release. It's because they want to work out all the bugs and all the kinks. So I think I just found us a bug. So I'm gonna report this bug and make sure they fix this. But again, so far, as long as they fix this bug and everything, it looks like, you know, everything is nice. I mean, again, I don't see another DEX that offers this many Forex pairs. I just don't see that. All right. So once it gets on mainnet, I think this is going to be a very, very powerful DEX where a lot of people are going to come here to get involved in those Forex pairs. And if they increase the offerings on equities, indices, and commodities, I mean, I think it becomes a no-brainer. A lot of people are going to be walking in and going to be logging into this. And I think, yeah, I think if they do that, if they execute well, I think by mid 2026, third quarter 2026, you might see Hertz flow all over your timeline. So I do think that this is going to be a great thing. We try to place an order. It doesn't look like it wants to do that right now. Maybe it's because of the amount of activity. Oh, it looks like even my existing positions aren't showing up. So maybe, they're just dealing with a lot of network traffic right now, as a lot of people are trying to trade right as the New York Stock Exchange opens. Actually, it's really funny that even something like TradingView stops working on really volatile days because so many people are trying to log in at the same time. It happens. These kind of things do happen. So I'm not too worried about it. Maybe for our next segment on Monday, we'll do some live trades on Hertz Flow, and I'll show you guys more of that. But so far, man, I think this was a great session. I mean, we had a 2.5-hour session today. We went over like the importance of investing. Again, guys, in the YouTube description, on the bottom of the YouTube video, I will put the link to this spreadsheet so you guys can play around with it. You guys can see your own numbers. You guys can play around, and based on how much you're willing to invest, you can see like what it looks like for your future. I'll put that all in the description down in the YouTube video. And next week we'll go over more finance stuff. We're just gonna build right on top of this. So today we really talked about why you should invest, how you can get started, and all that stuff. And then next time we're gonna be talking a little bit more, and we'll cover more current events, more markets, more trades, and just the basics, How do I buy a stock? What's a stock? What even is an index? All these words that I used today. I mean, I didn't use a lot of complicated words. I tried to really simplify things, but even some of those words like what's a stock? What's a bond? What's an interest rate? Why is that even important? I'll go over all of that on next week's live stream. So that's Mondays and Thursdays at 7 a.m. Eastern. That's when I'm going to have the finance related streams. We're going to call that Money Maxxi. Hopefully I'll be able to also secure some guest speakers, some high profile traders, perhaps, people that create financial apps and things like that. I'll be able to invite them to the show, ask them some questions. Maybe you can, maybe we can get their take on what's going on in the markets and things like that. So I'll be preparing that for the weeks to come. But again, Money Maxxis every Monday and every Thursday at 7 a.m. Eastern. We're going to do that. And of course, all the rest of the days, we're still going to play some video games. We'll still, play around. We'll still, we got the Key Crew, the esports team that we're building up as well, too. So we're going to play some games, too. That won't stop. That will probably happen more on nights, though, on the other days of the week. But Mondays and Thursdays, we'll keep it in the morning with 7 a.m. all the way to, like, market open, to get your mind right to make money for the day. Again, we'll do it on Mondays and Thursdays. So that's like the beginning of your week. You get to start your week off with Rooster, and you get to also end your week with Rooster as well with some money talk. All right, guys, this was a very, very cool Money Maxxi. I want to thank all the people that wrote in questions. There were a lot of you that actually came in and asked questions, beforehand, before the show even started, in the days prior. Some of you guys were already DMing me questions. Today, we had a few people actually live DMing during the show, asking me questions and things like that. So I appreciate every single one of you guys. And even you, the watcher, the listener, whoever you are, the audience, I appreciate you as well. You could have been anywhere else in the world, but you decided to be here with me. And I appreciate that. I really do. So we're going to be back on for another Money Maxxi. Again, Mondays and Thursdays, 7 a.m. Eastern. Later tonight, I'm going to get back on. We're going to play a little Fortnite. Actually, I might be playing with M, and she might be showing me how to build on Minecraft. So if you guys are interested in that, hey, come join us. We got some more content on the way. Anyway, guys, that's it for today's episode of Money Maxxi. I will see you guys on Monday morning for another edition of Money Maxxi. But I'll see you guys later tonight for a little bit of Fortnite and possibly some Minecraft as well. Have a great day, guys. Hope you make lots of money. I'll see you guys later. Peace.